Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to your own YouTube channel. Many people are saying, sir, we are approaching the end of audit. We have discussed chapter number 1, nature, objective, scope. Chapter 2, audit strategy, planning, program. Chapter number 3, risky areas identify. Chapter number 4, get lot of evidence. Chapter number 6, documentation. Chapter 7, completion. But why are we doing all these things? Why? To give a report. So here we are with brilliant revision of chapter number 8, audit report. Yes, it has lots of essays, lots of interesting concept, one of the brilliant chapter, and you will find the best revision of this chapter in only English right now itself. Yes, guys, what you can expect from this lecture? Excellent conceptual clarity of all the concepts. Wherever required, whichever answer required, you will be able to learn in the lecture itself. Be rest assured, sit back at your home and enjoy masterpiece revision of chapter 8 audit report in only English. I hope you like the lecture. If you like, give a like button and share with your friends too. It gives us lots of motivation. Thank you so much. Take care. Very good morning, guys. Welcome to the best lectures of FMSM and Audit nationwide. We have till now finished 7 chapters. We are starting with the 8th chapter. It's a little bigger chapter, high weighted chapter. Okay, it's of 12 to 15 marks chapter. That is why if some portion is left of this chapter, maybe CARO portion will be left. Otherwise, so everything should be done. Okay, we will do it tomorrow. If we get time, of course, we'll finish today, because tomorrow is a smaller chapter of only 4 to 6 marks, that is bank audit. Okay, so today is a bigger one. Let's finish that first. Audit report. After that, only I think 3 chapters are left after today. Let's start. Audit report is number of essays. Okay, number 1, how is this linked? First of all, we need to understand that. Okay, look at all the chapters, and this is a deep link with all chapters. Let's start. Chapter number 1, nature, objective and scope of audit. Chapter number 2, audit strategy, plan, program. Chapter number 3, identify the risky areas. Chapter number 4, get lot of evidence. Okay, chapter number 6, don't forget to maintain documentation. Chapter 7, while just completing audit, there are few essays. Now, why are we doing all this? Not for fun. Are you clear? Whatever we did till now, last end, oh my god, I forgot, we have to be ethical also. Why are we doing everything? Just to give that report. Okay, so final conclusion of entire audit is that one audit report. Now, how reporting will be done? There are several essays based on that. Okay, so that is what we have to study in this chapter. Can we start? Yes, sir, right away. Let's start. Number 1, we have to study 700, 701, 705, 706, 710. So 5 essays we have fixed. Let's start right away. First of all, 700. 700 is what? Whenever you give unmodified opinion, that is a clean report. What is the format of the report that we will study? In India, whenever a clean report is given, yes, 299 as well. How is it given in India? So that format we have to study. Very less questions come from this. Okay, but anything can come, as they say. Okay, so we are doing it. Number 1, what is the name of essay? Forming an opinion and reporting on financial statement. Forming an opinion and reporting. Tell me, first we form a opinion or report? Form a opinion and then a report. Why this standard came? Earlier, everyone had different format for reporting. Someone will use this format, someone will use this format. Standard said, close this masti. We want to do grand masti. And they introduced one common format. So whether I look at financial statements of Tata Motors or Mahindra, both will be same. Okay, format of course. Okay, so it's comparable. I want to compare Tata Motors with Tesla globally. Format is same because we have copied their format only. I hope it is clear. So number 1, why do I learn this essay? to form an opinion. How I will form? Based on evaluation of conclusion drawn from evidence obtained. If you want to simple English, I will get evidence. On evidence, I will form conclusion and give a report. So this standard came. Second, to express that report clearly through a written report. It cannot be oral report. Why? There are so many shareholders. Moving on. Purpose. Why this standard came? It's aimed to address the gap between consistency and comparability in global reporting. Okay, let's take example, consistency. I want to compare with my last year. I cannot compare, format different. Now I can compare, format same. Second, comparability. As I said, Tata wants to compare with Mahindra, Tata wants to compare with Tesla. You can compare with everyone because dash is same. Format. Next, it will increase the value of audit report. Why? Everyone will understand. This is the format. This is how I read the financial statement. Okay. As I said, this is not so important essay. So I will also tell you what to learn. Okay. But understand very nicely. What to learn doesn't mean I am telling you important things. I am telling you whatever is possible. This much only they can ask. Rest is irrelevant. Okay. So this is favorite essay for maybe numbering. They can ask after this point will come. So total 13 points are there in auditor's report. Number 1 point in every auditor report, you can see Reliance, TCS, Tata, okay, is a title. So title will be there. First point. There are 13 points. Title will clearly state it's a report of an independent auditor. Okay, so first line is report of independent auditor. Now you will ask me why such title is required. See, if the word is independent, confidence of shareholder will increase that this auditor is nowhere associated with the company. He will give unbiased report. So this is must. Number 1, title. What is the title? Report of an independent auditor. Can any question come? No. Second line in the report we write, okay, addressee as required by circumstances of engagement. Whom to address, whom to give report. Okay, so usually company audit report is given to shareholder. Branch audit report is given to company auditor. Internal audit report is given to management. So as required by circumstances. Tell me you bought a Cadbury, whom you will give? Whoever is your current girlfriend at that time. Are you clear? Circumstances of engagement. Title, addressee. Third point can definitely come. Auditor's opinion. First thing we should have is opinion. Auditors, see, earlier what was there I will tell you, but why God knows. But still let me tell. Earlier we had basis of opinion and then opinion. So all shareholders were wondering, are basis opinion they don't find. They find every other rubbish thing. So now Gen Z, your generation, you're like, don't forget, I don't want all this. Just tell me opinion. I am not concerned with basis and thesis and all. Okay. So first opinion will come, then basis for opinion will come. So opinion. In opinion, what we will write? I will write, if it is a modified opinion, I have to write qualified disclaimer, but that is next standard. So first I will write opinion. In opinion, how many points are there? 4. Do I need to learn? Yes. How you know? Because it's in module. 1, 2, 3, start. I did very simple. Third point, we should have a heading opinion, auditor's opinion. 4 point it will have. Identify entity whose financial statement are audited. Second, state the fact that the financial statement are audited. More rubbish. Third, identify title of each statement comprising financial statement. What is title? Balance sheet, P&L, cash flow, statement of changes in equity, notes. Oh, notes you forgot. Again, refer to notes including summary of significant accounting policy. Last, specify the date or period covered by each statement comprising financial statement. What is date or period covered? P&L is for the year ended. Balance sheet is as at. Are you clear? So you need to write P&L is this, balance sheet is this, cash flow is this. Over. In real life, this all is written in just 2 lines. Okay, but we have to learn this. Is it easy? No, it is too easy. Number 1, identify entity means we have audited financial statement of Reliance. Number 1, identify entity whose financial statement are audited. 2, state the fact that financial statement are audited. We have audited. Third, identify title of each statement comprising financial statement. Name each statement which is part of financial statement, balance sheet, P&L, etc., etc. Don't forget notes. Refer to notes including summary of significant accounting policy. Last point, specify the date or period covered by each statement comprising financial statement. Small break of 10 seconds. Easy, super duper easy. Time pass this is. What's the track record? Of late never asked. Of late zero track record. This is more understanding standard. Sir, time up. I think you can go ahead. Okay, very simple. So you have to learn. Come here now. In India, two type of opinion are there. Okay, sorry, unmodified opinion. When you give clean report, we give in two ways. This is a very important question, but track record is zero. Who feels it is important? Only me. ICAI never felt important. Maybe they feel this at final level, but still, come here. There are, whenever we give opinion in India, we give in two ways. One last time, we give in two ways: fair presentation and compliance framework. In fair presentation, what language I will write? Financial statement give true and fair view in all material aspect as per FRF. This language I have to write. They never ask drafting question, but they can ask. Whenever I use compliance framework, what language I write? Financial statements are prepared in all material aspect as per FRF. Now your second question, why such language? Why? What is the meaning? Now I will explain. Come here. Fair presentation means what? Okay, I just want to look at everything is presented nicely or not. Okay, so there are two formats: fair presentation and compliance. What is fair presentation? It gives permission to go for additional disclosure or amend the requirement of FRF for better presentation. Not at all understood. See, I can go for additional disclosures or I can amend the financial reporting framework. Let's take example. Format of P&L is P&L for the year ended. But I am a new company. I am working only since 8 months. So I can write P&L for 8 months ended. Why? Because it is giving better presentation. Okay. So I can go for additional disclosure. Amend the requirement of FRF for better presentation. Second, life of asset is 20 years. I feel it will work 30 years. I can take 30 years in fair presentation. Why? Because it is a fair. Okay. It gives permission to go for additional disclosure or amend the requirement of FRF for better presentation. Example give schedule 3. Whenever you get schedule 3 audit, it is not compulsory that you follow the format. If it is looking better, you can change the format for better presentation. Come here, come here, come here, come here. But certain audits are there. Compliance framework. No permission is given in fair presentation. Here I only have to check whether format is nice or not. I don't want to check fair presentation. Financial statements are prepared as per FRF. I only need to check format, baby. Tell example, insurance, banking. In this, they don't want fair presentation. All they want is follow our format. RBI has given format. IRDA has given format. Understood? Yes. In exam never asked, so we don't know. Okay. But one last time. If they ask, they will ask for 4 to 6 marks. Okay. In fair presentation, I just see sometimes what happens when you give house. Okay. You want to build a house. Some people will tell architect what? Okay. Build the best house possible. If you want to change little, change. Okay. But some people tell what? Don't touch. Do whatever I tell. This is the format, just follow this. No, don't apply your knowledge, keep at home only. Are you clear? So this is compliance, which is better, that we don't have to write. Are you clear? But language understand. So if this language comes, what you have to write? Financial statement give true and fair view. Okay, in all material aspect as per FR. It means I have checked overall structure, content, presentation is awesome. In compliance, financial statement are prepared, I write, not true and fair, because I have only checked preparation, are prepared as per FRF. Over. More I am not going and discuss because it doesn't come in exam. Okay, let's come to till now 3 points are done: title, addressee, opinion. One more time: title, addressee, opinion. Now basis of opinion. How did you arrive at that opinion? Sir, from my brain. No, not allowed. Okay, this can also come how? Given in module. Okay, very time pass. Number one, how you gave opinion? Audit was done as per standard on auditing. Second, refer to section of auditor's report that describes auditor responsibility under SA. Baby, I have followed auditor responsibility under SA. Very good. Third, statement that I have also studied chapter 11. Auditor is independent and has followed ethical requirement and code of ethics issued by ICAI. Very simple. I studied first chapter also. Whether auditor has got sufficient and appropriate evidence to form an opinion. Now this whole India knows this, but if you don't write this 4.0, they will write basis of opinion. What should be written? You are basis out of syllabus question. No, this 4 points. Number one, how do you give opinion? Audit was done as per standard on auditing. Second, refer to section of auditor's report that describes auditor's responsibility under SA. Third, statement that auditor is independent and has followed ethical requirement and code of ethics issued by ICAI. Last, auditor has got sufficient and appropriate evidence to form an opinion. Over. I hope this is super clear, very easy. One last time, how to remember? Number one, I followed SA. Number two, I followed what? Okay, auditor responsibility. Number three, code of ethics. And number four, sufficient and appropriate evidence. I think after this, only one question to learn. Over. Basis of opinion. 1, 2, 3, start. Audit is done as per standards on auditing. Second, refer to section of auditor's responsibility. Auditor's report that describes auditor responsibility under SA we have followed. Third, okay, statement that auditor is independent, has complied with ethical requirement and code of ethics given by ICAI. And last, whether sufficient and appropriate evidence is obtained to form an opinion. Over. Small break, 10 seconds. Done? 1, 2, 3, start. Number one, audit is done as per SA. 2, refer to section of auditor's responsibility that describes auditor's responsibility under SA. Auditor is independent and has followed ethical requirement and code of ethics given by ICAI. Whether auditor believes he has got sufficient and appropriate evidence for forming opinion. Now nothing to do. Can you explain third point one more time? Third point, this one. This is third point. Fast reply. No. This is third point. Third point in real life means what? Okay, you have to write one statement. We have audited financial statement of Reliance, and in that we have checked balance sheet, P&L, cash flow statement, changes in equity, notes to accounts. Over. Explain. That they have written in English. Shall we go ahead? In English they have written all this. Okay. In real life it is 100 times more easy. By mistake, if you read this, then you will be confused. But ICAI wants this only. Moving on. Now nothing I think we have to learn. Concentrate fast. Going concern. Whenever there is a doubt on going concern, okay, we have to write here. In two cases, when going concern is invalid or when there is material uncertainty about going concern. So in real life, 99.9999999% this point is blank. Okay, we don't write anything because always going concern is valid. But if that one situation it is invalid or there is material uncertainty, point will come here. So practically in real life, 0 point. Question can be asked from here, impossible. Why? Because we have a separate essay. Key audit matter. This I will teach you exactly after 20 minutes. Oh my God, very good. Oh, one last question I told, no, it can come. Responsibility of management. Your management not written. Tell me what responsibility management has. In 1 second over, preparing the financial statement as per FRF. For preparing internal control to ensure financial statements are free from material misstatement. Assess the entity's ability to continue as going concern. You already know. They can ask what are responsibilities of management. 3 responsibilities. But they will ask not here. Maybe chapter 11. But still let us learn. Number 1. Preparing financial statement as per FRF. 2. Internal controls to ensure financial statement are free from MM. Material misstatement. Last, assess the entity's ability to continue as a going concern. Management will check going concern valid or not. Over. Read one small break, 10 seconds. Time up. Moving on. Now, nothing to learn in this essay. Now, big point is given. Auditor's responsibility for audit. We have already studied entire auditor responsibility. So, I will just read. Impossible this can come. Till now, zero track record. What is auditor responsibility? Number one, you have to write objective of audit. State objective of audit is to get reasonable assurance that financial statements are free from material misstatement. Over. Now describe two words in detail. Reasonable assurance is a high level of assurance but not a complete assurance. Very good. Misstatement are material if they can influence the decision of user. Over. Shall. Over. Same thing written. Moving on. Auditor responsibility sell further. Arey auditor, wait. This is the only first chapter. Second, third chapter also you studied, no? So that also you have followed. We will write that. Entire summary they have given till now. Number one, you have done professional judgment and professional skepticism. Second, okay. First point, you have found out ROMM auditor. It's your responsibility. Second point. But ROMM, you found out in ROMM what? IR into CR, control risk. You found out control risk for the purpose of further audit procedure, not to express opinion. Very good. Third, you also checked accounting policy and accounting estimate. Yes, I checked. In RAP, if you remember, scope of audit. Second, SF 570, you checked whether going concern valid or not. Oh, yes, I checked. Fifth point, you checked whether financial statements so fair presentation, overall structure and content is proper. That were studied before 2 minutes. Oh, yes. In case the work is taken of another auditor, you describe what work is done by another auditor. So if he does fraud, you are escaped. You have to write these branches are audited by another auditor. Over. Shall I learn this? No. Why did I explain? I also don't know. Moving on. Oh my God, your responsibility shall further. Wait, also shall. These three are also your responsibility. You studied no chapter 7 yesterday, then same, that we forgot, okay? You have to talk with TCWG. What? Significant finding from audit. It's your responsibility. Do significant we write plan, scope and timing, independence, response significant. Second, you have complied with ethical requirement, that also communicate with TCWG. I. Last, key audit matter that we will study later. Done. Over now. Layout of description of auditor's responsibility. My next question. Tell me, auditor responsibility were too much or too less? Auditor, too much responsibility was there, not too less. So they are saying auditor's responsibility you can also write in separate way, where in the body of auditor's report. Understood. Second, you can write in appendix to auditor report, but give clear reference to the paragraph or appendix where it is written. Example, it's too bulky, so where you can write, you can say that we are writing in 92 page, give reference to 92 page, which note number. Third, you can also write in website of appropriate authority if law or regulation permit. Your next question, which appropriate authority? SEBI website? No, company's website. If law permits, okay, so that also. Law means country law, whichever country. Three places we can write. In India, though, we write everything here only. Why? So much who will read English? Are you clear? Anyways, no one reads the report. Tell me, auditor's responsibility can be written at different place also. Number one, in the body of auditor's report, in appendix to auditor's report, okay, but give clear reference to appendix. Last, website of appropriate authority where law or regulation permit. Last, other reporting responsibilities are also there. What is other reporting? See, as per Companies Act, not only audit report, in India additional requirement are also there. Auditor check this, auditor check this, auditor check this. So if other reporting responsibilities are there, then I will write here. Okay, as example, CARO we have to check. Okay, there are different sections which we have to check, that will come here. If reporting responsibility under other law is same as essay, then no need to write here. In essay, we followed this responsibility. Same are there, then don't write. Otherwise, we have to write here. So this is different from every country. In India, we have CARO. Australia, we might have SARO. France, we might have MARO. Are you clear? Whatever we have to write here. If other reporting responsibility are different, then those given under essay, they will be written here. Reporting on other legal requirements. Next, signature of auditor, very good. In this, what to write? You have to write your membership number and if it is a firm, write your membership number, also firm registration number. Okay, CA firm you are working, firm registration number, your membership number, and then of course sign. Earlier what was done? Physical sign. Now listen what is done. UDIN is there. Question comes on UDIN definitely. Of course, in module question we have discussed, but still I will explain. What is UDIN? Unique Document Identification Number. Many CAs were projecting themselves to become CAs. Okay, fake signature was done. It is a big practice in India. Lot of fake signature was done. So, okay, they were forging themselves to become CA. Reliance audit is done by me, but fake sign someone can do. So all that was happening. So ICAI introduced UDIN, Unique Document Identification Number. Every CA who will sign audit report or certificate has to register on UDIN. So first of all, you need to register on UDIN. You need to enter your, create your ID, password, etc. Now, whenever you want to sign any report, you want to sign any certificate, first of all, upload that certificate in UDIN portal. UDIN will automatically generate a number. For example, 4532Q, that number generated. Means, okay, permanent that record will be stored. That this 4532Q is which document? Oh, audit report of Adani. Very good, signed by me. How they will know signed by me? Because I use my digital signature, if you don't know. Through pen drive it is done. Okay, document is uploaded. So permanent ICAI will have record in cloud that this document was signed by me. Sir, what if someone from your computer will insert fake digital signature? That all no one can cover. I hope you understood. Okay. Shall I explain again or understood? UDIN portal is created. Any CA who wants to sign any report just need to register in UDIN and upload that document. Unique number will come. This will be a permanent number. In future government can track. Very good. Then place of signature. Usually we write the city where the report is there. So we don't write name of city. Date will be which? After management has got representation. After I have got audit evidence. Okay. Without getting evidence, how will report be signed? So last 3 points are time pass. SPD. Signature, place, date. Shall I show you? It will be too much detailed. Nothing comes in exam, so I thought that why to show. Do we have fast anything available? This Reliance will take lots of time. Date modified. The small company, so we can show you fast. Board report I don't want. Give me audit report. Over also, God knows. See here. Very simple. See, first of all, this is a proprietor form. If form was there, form registration. Paresh Vora, partner, membership number, UD, over. Then second was what? Place. Here. And third date. Over. Okay. Now, you had doubt in one point. No, let me show you that also. Where it went. Basis of opinion. Now, opinion you had doubt. See here. We have audited Chetna, which comprise balance sheet, P&L, cash flow. Over. Same. Then write period of balance sheet, P&L. Over. So simple. So with this, we are done very quickly. Rough type, according to me, nothing should come from here, but still. We don't want to take zero risk in life. Start. We will learn entire thing just for understanding. See, why am I making you learn? One MCQ can come. After this, which point will come? Before this, which point will come? Only that. Okay. So with 6 points to break. Number one, title, addressee, opinion, basis of opinion. How to remember? Title, addressee. What are you giving? Opinion. How are you giving? Basis of opinion. Title, addressee, opinion, basis of opinion. Going concern, key audit matter. Going concern, key audit matter. Going concern, key audit matter. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Sir, listen now. Auditor responsibility very bulky, very big. So you can write separate also. Layout of description of auditor's responsibility. Layout of description of auditor's responsibility. Read this much. Last date should be 30th September, I think. Audit report last date is before AGM. AGM last date is given. Audit report last date, there is no law in India. But ideally, it should be before 30th September. As per law, no date given. One last time, title, addressee, opinion, basis of opinion, going concern, key audit matter. Going concern, key audit matter. Responsibility of management, responsibility of auditor, layout of description of auditor responsibility. Done. Now the very simple. Other reporting responsibility, other reporting SPD, signature, place, date. And one more time, signature, place, date. One last time, signature, place, date. One more time, done. Other signature, place, date. Small break, 5 seconds. Only remember before and after, bus. Don't, if you don't know 13 points, still okay. Chalo, time up. Moving on. Now, this is good question. It's a part of module question. Okay, definitely it can come. Okay, not as since new syllabus, but still it can come. See, such weird question is their answer is maha time pass, third class answer. But ICAI likes all these things where you don't know question only, answer very easy. So no one can write because no one has read. See what question can come. Specific evaluation by auditor before forming an opinion. Now you will think out of syllabus this came. No, but it's a module only. Specific evaluation means check following things before forming an opinion on financial statement. If they are specific evaluation by auditor before forming an opinion, only you have to focus on learning, understanding, utter time pass. Number one, first point, terms used in financial statement including title of each statement is appropriate. You need to check term used in financial statement, title is appropriate. P&L, balance sheet, cash flow, statement of changes in notes, proper heading they've given. Sir, these anyways I will check. Specifically check. Second, information present in financial statement is relevant, reliable, comparable, understandable. Sir, these two anyways I will check. Again check. Specifically check. Third, financial statement disclose significant accounting policy selected and applied. All accounting policy whichever select, okay, disclosure should be proper. Example, accounting policy, depreciation, inventory, okay, method of accounting, etc. Accounting policy selected and applied should be consistent with FRS and as per the law. So these I will check. I know again they will specifically check. Third, accounting estimates used by the management are reasonable. Sir, that too in chapter 1 only I checked. Specifically checked. Last point. Financial statement adequately summarize significant accounting policy selected and applied. Important accounting policies selected and applied. Notes in accounts to accounts give. That too I will give. Specifically give. Provide adequate disclosure to enable user to understand material transaction and event. Definitely it can come. Why? It's a specific question. No one will read. One last time. Specific evaluation by auditor before forming a opinion. Can we start? Simple? No, very simple. Number one. Terms used in financial statement, including title of each statement, is appropriate. Second, information present in financial statement is relevant, reliable, comparable, understandable. Third, okay, financial statement adequately disclose significant accounting policy selected and applied. Accounting policy selected and applied are consistent with FRF and are appropriate. Accounting estimate used by the management are reasonable. Financial statement adequately disclose significant provide adequate disclosure. Financial statement provide adequate disclosure to enable user to understand significant event and transaction. How to remember? First, remember 2 points. Done. Next, third point. Third are two accounting policy point. Financial statement adequately disclose significant accounting policy selected and applied. Accounting policy selected and applied are consistent with FRF and are appropriate. These 2 points. Accounting policy. First, disclosure you have done. Those disclosures are as per FRF. Remember 2 points. Next point. Accounting estimates done by the management are reasonable. More time pass. Last, financial statement provide adequate disclosure to enable user to understand material transaction and event. Understanding zero required, learning full required. Over. Shall I speak one last time? If you want, we can. Tell me, what are evaluation by auditor before forming a opinion? Okay. Number one, terms used in financial statement, including title of each statement, is appropriate. Next, information present in financial statement is relevant, reliable, comparable, understandable. Financial statement adequately disclose, okay, significant accounting policies selected and applied. Third, accounting policies selected and applied are appropriate and as per FRF. Next, accounting estimate used by the management are reasonable. Financial statement provide adequate disclosures to enable user to understand material transaction and event. All points are extremely rubbish because you have checked this multiple times. Small break, 10 seconds. Learn this nicely and then we move to another interesting essay. Good one. This is pure learning question. It's a module question you are learning right now. That's the only difference. Moving on. 1, 2, 3, start. Let us learn last time. Specific evaluation before forming an opinion. Number one, terms used in financial statement, including title of each statement, is appropriate. Second point, okay. Information present in financial statement is relevant, reliable, comparable, understandable. Third point, financial statement provide adequate disclosure, okay, regarding accounting policies selected and applied. Accounting policies selected and applied are appropriate and consistent with FRF. Accounting estimate used by management are reasonable. Financial statement provide adequate disclosure to enable user to understand material transaction and event. Over. Now let's move to another essay, 705. This is pure understanding essay. Nothing can come as learning question. Let's start. Modified opinion. In India, whenever you have to give modified opinion, now you will ask me question, what is modified opinion? Qualified, disclaimer, adverse. Unmodified is clean. This standard is followed. Good thing about the standard, nothing to learn. Hot favorite MCQs come. We will go, of course, 10 level more detailed. In exam, very simple questions are asked. Can we start? Why not right away? Modified report. Whenever you want to give modified report, qualified, disclaimer, adverse, this standard comes. I think we should end in 10 minutes. Qualified report. When is it given? After obtaining evidence, I feel misstatements are material but not pervasive. Okay, I need to explain you one word first. Pervasive. Today, officially, I am explaining. What is pervasive? Pervasive means effect of the financial statement is not is spread to multiple accounts. Okay, then it is pervasive. Pervasive means effect is spread to multiple accounts. I have problem only in hand, then it's not pervasive. But I have problem in heart, effect is spread everywhere. Entire body will be damaged. I hope you understood. Pervasive means effect is spread to multiple accounts. Second point, if it is spread to one account, it's a substantial portion of financial statement. Example, mistake is only in sale, but it covers 90% of sale. Then debtor, inventory, everything will be wrong. I hope you understood. If you don't understand this word, very difficult to understand standard. One last time, what is pervasive? Effect is not spread, sorry, effect is spread to multiple accounts. That is pervasive. Second, if it is spread to one account, it's a substantial portion of financial statement. Moving on. Qualified report is given when I feel mistakes are material but not pervasive. Okay, let's take example. Mistake is in depreciation of 40 crore. I tell management correct. Management saying I will not correct. Now I cannot say everything is wrong except fixed asset depreciation, all is correct. So what I will do, I will give qualified report. In qualified, drafting can be asked if they want to go one level ahead in life. Okay, they are like, we're too much easy asked in life, let's go one level ahead. Then drafting is asked. In drafting, what you have to write? Financial statement give true and fair view as per FRF, that we write. But in qualified, change little kuncham. What we will write? Except for the effect of fixed asset, financial statement give true and fair view. Except my hand, I am proper. You have to write what language? Except for the effect of depreciation, financial statement give true and fair view. Till now, how many times drafting question asked? Zero. But I don't know what they will ask in this. So I am explaining something. Except for the effect, it gives true and fair view. Second, one more time qualified report can come. When I don't get evidence, then disclaimer. No. If I don't get evidence and I feel mistakes could be material but not pervasive. Why could be? I did not get evidence. I went to all factory, Australia factory, they are saying you cannot do. Now, Australia factory is 10% of inventory. It's material thing, but it's not pervasive. Effect is not spread. Okay, then which report will come? Qualified. Except Australia, everything is good. So here what language I will use? Except for the effect, no, except for the possible effect given in basis of opinion. Except for the possible effect of depreciation given in basis of opinion, financial statements are prepared as per true and fair. Over. And one more thing, one more MCQ can come. Your basis of opinion will not come. You have to write what? Basis for qualified report, basis for adverse report, basis for understood, fully understood. One last time, okay, just understand in your brain when qualified report is issued. When I feel mistakes are material but they are not pervasive. I did not get evidence. I feel they could be. English could be material but not pervasive. Take one more example. Inventory overvalued by 40 crore. I tell management correct. If they correct, then nothing to do. This standard will not apply. If they don't correct, it is material, baby inventory material. But I cannot say it's pervasive. Understood, fully understood. In language also this time, very good. Next, adverse report. Tell me in adverse what is that? Mistakes are both material and pervasive. I got evidence, I feel mistakes are material. Can you take one example? Why not? Going concern not valid. So financial statement should be shown at what? Cost. Sorry, NRV. NRV. Whenever it is not valid, I told you that financial statement are shown at NRV. But we are showing at cost only. Why? Correct? No. Management not correcting. No one can show it NRV. I will show it cost. Now everything is wrong. Asset wrong or liability. Everything. Sari duniya jala denge. Everything is wrong. Mistakes are and material and pervasive. Over. Your language is never asked till now, but I don't want to skip one word also. Because of significance of matter in basis of opinion. Here what you have to write? Because of significance of opinion, financial statement do not give true and fair view. Right, like that. Do not give true and fair view because of significance. Can you tell one more example? Doubt in current asset, fixed asset, this. 4-5 areas the mistakes are there. They are pervasive. Effect is spread in entire body, baby. Moving on. Disclaimer opinion. It is given when I did not get evidence and I feel mistake could be material. No, and pervasive. Material and pervasive. When I went books of accounts with income tax, I went GST, I went fire. I cannot give an opinion. Here what I will write, Okay, what I will write? Auditor was engaged to do audit. I was engaged, but I could not do. Why? Because on marriage day, girl did not come only. I was engaged to do marriage. She did not arrive only. Here, misstatement could be material and pervasive. English. Because of significance of matter in basis of opinion. Auditor has not got evidence. Here you don't write true and fair view. True and fair view, forget, we did not get because of significance of matter in basis of opinion. Okay, auditor has not got sufficient and appropriate evidence. Evidence only not got. What audit will happen? Because of significance of matter in basis of opinion, we did not get sufficient and appropriate evidence. And one more thing we'll write, we were engaged to do audit. I don't think they ask all this. God knows what they ask. Very simple question they ask. But we don't read only full. Okay. Second, other consideration when you give adverse or disclaimer opinion or qualified opinion. When auditor issues adverse or disclaimer opinion on financial statement as a whole, it means you are telling mistakes are material and pervasive, or it could be material and pervasive. Auditor report shall not include unmodified report with respect to same framework on one or more specific element of financial statement. Not understood. See, you are saying mistakes are material and pervasive, could be material pervasive. Then you cannot say on specific P&L is clean, only balance sheet mistake are there. No, you only said effect is spread to multiple accounts. Sometimes we tell someone, no, you are very good friend, but sometimes you are like mad. Then he is not your friend. You are very good looking, but stomach little more. Means he is not good looking. Be very clear in life. You are very good person, but this thing not good about you. Money you don't spend, not good, not good. Means bad is bad, good is good. So when you are giving qualified, sorry, not qualified, cut, because in qualified to it's material but not pervasive. Whenever you give adverse or disclaimer report, you cannot give unmodified report within the same FRF for single element of financial statement. If you are saying it's adverse or disclaimer on separate P&L balance sheet, you cannot say it is clean. Are you clear? Bad is bad, good is good. One last time. When auditor issues, auditor report shall not include unmodified opinion in the same FRF on single financial statement or one or more specific element of financial statement. Understood? One more good MCQ. No, that I removed. I shifted that MCQ to other place. But still I will tell. Whenever you give which report? No, let me take there only. Communication with see, when you are giving qualified disclaimer adverse report, one case study can come. Will we talk with TCWG that we are going to give this report? Yes, sir. Then they will not give fees. My fees pending. Then do you feel in surprise we will do audit? Mad you are or what? We need to talk to them. Okay, regarding expected wording and situation due to which modification came. I will talk with them the situation, circumstances that led, and the expected wording. Why circumstance? They might still correct. Why wording? It should not look rude. Understand, they are owners of company. They have invested, they have 70% in a company, ownership is with them. If by mistake share price will come too down, then what will happen? In life, problem will happen for them. So tell them, sir, they will tell, instead of this, can you write it this way? Is it allowed in your standard? You're like, okay, allowed, sir. No problem, I will write. So talk with them, no problem. Case study can come. When auditor expects to modify, this question is there 3 times. Whenever you want to do anything in life, talk with them. If auditor expects to modify opinion, auditor will communicate with TCWG. 2 things. Number 1, circumstances that led to modification and wording of modification. Circumstances and wording. Understood. Opinion should be on overall. Understood. Okay. Now simple. This chart, I will explain entire thing. It's brilliantly given in ICAI module. We have not done chart because then language you don't understand. So we wrote full. But very nicely given in ICAI book. Good question, understand. I will read everything. Consequence of inability to obtain evidence due to management imposed limitation. Question only not understood. See, you did not get evidence because management imposed limitation. Example. Confirmation will come from all, but it will not come from Rajesh. You are like, why? Just like that. Our company. Second, you can visit all factory, but not Australia factory. You are like, why? Our wish. If auditor is unable to get evidence due to management imposed limitation, what is the first step? You think, I will request management to remove the limitation. If they don't agree, I will go to TCWG. Sir, you seem intelligent. Please tell your management, I have to obtain confirmation. I need to go in Australia factory. Are you clear? You try to request. If not possible, do alternate procedure. What alternate I will do? Opening stock plus purchase minus sale, closing stock, Australia factory. Debtor also try to do alternate procedure. If that is also not possible and you feel mistakes could be material but not pervasive, give qualified report. Sir, why could be? I did not get evidence. Give qualified report. They could be material but not pervasive. But change. I feel that qualified report is not enough to communicate gravity of situation. I feel mistakes could be material and pervasive. Only qualified report is not enough. Then what I will do? Withdraw from the engagement. If not possible to withdraw, only then give disclaimer. Story is brilliant. Shall I explain again story? Again story? Yes sir, again explain. But first I will read English. If auditor is unable to obtain evidence due to management imposed limitation. Management told, don't check this data. Don't check this stock. Auditor shall request management, sir, please remove. If management refuses, auditor will talk with TCW and determine whether is it possible to do alternate procedure. Management, TCWG, alternate procedure. If auditor is unable to get evidence and conclude, misstatement could be material but not pervasive. It could be material but not. Then give qualified report. Give. If auditor concludes, possible effect could be material and pervasive such that qualified report is not enough to explain gravity of situation. Your doubt will come in this paragraph only. Resign from the audit. If not prohibited by law. Early stages I can still resign. Why? I don't want to give disclaimer report. I don't want the money which is not worth. I have not done work. I don't want money. I don't want disclaimer. Call some other auditor. But if resignation is not possible, then issue disclaimer report. So whenever you give disclaimer report, we follow this entire process. Till here, very simple. If you feel qualified report is not enough to communicate gravity of situation, okay, then resign from the audit. If not practicable under law, then give disclaimer report. Any doubt? No doubts. Moving on. Next. Whenever you give qualified disclaimer, add words, why you give? Due to material misstatement. Yes or no? Yes. How to show material misstatement? Specific amount, right? Include description, okay, where the mistake is current asset, fixed asset, and quantification of amount. If it is not practicable to quantify amount, write in basis of modified opinion. Okay, basis for modified. Why you did not? Second. Narrative disclosure. Whenever misstatement are there, describe in detail. include in basis of modification. How disclosures are misstated. You understand what is Don't just write that this thing is there. Describe net worth has eroded, reduced. Don't write like that. Write net worth has reduced by 5 times. Non-disclosure. Whatever is non-disclosed, first discuss with TCWG and describe in basis of opinion. One related party is there, but company has not shown transactions with that related party, hence not followed AS80. So 3 things we will write. Number 1, specific amount, narrative disclosure and non-disclosure all will be written. With this, over. One simple MCQ again I am telling. Whenever qualified disclaimer adverse report will come, what I have to write? Qualified opinion, disclaimer opinion, adverse opinion. Also, basis for qualified, basis for adverse, wording will change. This good MCQ can come. But I don't know this standard also. Nothing comes. Moving on. Super duper easy standard came. Till now we were taking little time. Now this is 5-minute standard. 701. EOM and OM in independent auditors report. This I will explain more because I know more. Very simple standard. 701, 706. Both, why did it come? Let me explain first. In this only one single solo question is there. Any other question comes, be very happy. Super time pass it will be. See, our audit report were very boring. 90% of the time in CA, I spoke wrong, 99.9999 continue. Clean report only came. So all the people felt CA are useless, still they feel the same by the way. CA doesn't do any work. He will do lot of work and in the end give clean report. Over. Like lollipop. So value of audit was decreasing, auditor's report was decreasing and audit dramatically reduced. Third class people auditor are. So to make our report more communicative, to make our report more nice, to make our report more excellent, okay, more communicative, new standards started coming. 701, 706, both are 10 minutes. Can we start? Yes. So this is additional requirement, not compulsory. Two standard I am going to explain, EOM and OM. Let me explain in simple English first. If I want to describe anything which is a part of financial statement has 5 things: balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. I want to emphasize on anything, I will write in EOM paragraph. If I want to describe anything which is outside financial statement, but is related to audit, auditor's report, auditor's responsibility, I will write in other matter paragraph. Not at all understood. Exactly in 2 minutes you will understand. Don't try to learn this, but you will still learn. EOM, emphasis of matter. It's a paragraph in the independent auditor's report. This much to you know. That refers to a matter presented or disclosed in financial statement that in auditor's judgment is fundamental to users' understanding of financial statement. Anything of financial statement, according to auditor, we need to tell to user, we write in EOM. Simple English. What is financial statement? Balance sheet, P&L, cash flow, statement of changes, notes, anything you want to describe. Take 5 examples, sir. Number 1, profit increased due to prior period item. They know it, but still I will write in EOM. Then they will feel, "Arey, our auditor has worked very hard." Anything you feel. 4 new legal cases are there on the company. Very good. Our expenses increased because we have acquired a company. Very good. Our sales reduced because we sold a company. Very good. And we have checked that in detail. We are auditor. Anything you want to describe here. Our cash flow is negative because a lot of money was stuck in inventory and we have checked that. Anything you want to describe. Okay. I hope you understood. Let us write few examples. Profit increased due to prior period item, acquisition, sale. Okay, change in method of depreciation, whose effect is 42 crore. So all subsequent event, or there are 3 subsequent event, the effect of which is properly given. Okay. Anyways, you have to give. One last time, let us learn. EOM paragraph is a paragraph in independent auditor's report that refers to a matter presented or disclosed in financial statement Why disclosed? Notes are disclosed. That in auditor's judgment is fundamental to users' understanding of financial statement. See, if you see this matter, no, user, your understanding will increase. That is why we are here. Sir, where this will come? Before key audit matter. Key audit matter was that just before that we write. Not in syllabus. For knowledge, I am explaining. Now explain other matter. A paragraph in the independent auditor's report that refers to a matter other than those presented or disclosed in financial statement. This matter is not part of financial statement, but that in auditor's judgment is necessary for users' understanding of audit, auditor's report, auditor's responsibility. 3 words only understand. Many people will say, or a fool I will learn. 0 marks. No need only 3 words. Any matter you want user to understand that will help him in understanding audit better, auditor's report better, auditor's responsibility better. It will come in other matter. Take for example, last year audit not done. I am just explaining audit to you better. Second, last year audit done by another auditor. So my responsibility is not there. Few branches are not audited. Few subsidiary company audited by another auditor. Other matter. One last time. We go to marriage. We keep talking about couple, which is there in marriage because you went for marriage for food only. Okay, but still you talk about, are girl very nice, boy very nice, girl height little less, boy too much weight it is, are girl looking very black, boy to very fair, boy black, girl fair. When we talk about that couple, it is EOM. We are emphasizing on couple. Many people don't look at couple only. Outside only, food very less this time. Items are not good only. Look at how much black money they have, decoration see. Okay, so when you talk outside the couple, it's OM. When we talk about that couple, it is EOM. Just to understand. One last time, whenever we talk of any matter which helps in understanding audit, auditor's report, auditor's responsibility, it's OM. By mistake, I finished the whole standard. Now nothing if we read, still okay. This ignore. Let us read this again. Why? Because what to do? A paragraph in the report that refers to a matter presented or disclosed in financial statement that in auditor's judgment is necessary for users' understanding of financial statement. However, good MCQ, our opinion is not modified. See, EOM doesn't mean modified opinion. I am just emphasizing whenever modified report has to be issued, SS 705. This is not, I cannot write in EOM, we are giving modified report. No, it has to come in opinion. Other matter. A paragraph in the report that refers to a matter other than those presented or disclosed that in auditor's judgment is fundamental to users' understanding of audit, auditor's report, auditor's responsibility. I want to explain to user audit, auditor's report, auditors. Okay, other than those presented that in auditor's judgment is fundamental to users' understanding of audit, auditor's report, auditor's responsibility. Question what it will come? First of all, I think MCQ will only come. Cute MCQ they will ask. If I want to describe anything, where to write? EOM. Over. But in module, this question is given. Whenever you give EOM paragraph, how to show if they want to ask for 5 marks, this can come. When auditor includes EOM, auditor shall include the paragraph with separate heading of auditor's report with appropriate heading EOM. So what do you write? Include paragraph with separate heading in auditor's report EOM. Where? Before KAM, but that is not part of syllabus. Second, in that paragraph, what will you write? It should give clear reference to the matter being emphasized and where the adequate details about this matter will be found in financial statement. Profit increased due to prior period item. Profit is in which page? Okay. Legal cases are there 3. Where you have disclosed notes 82 page. It should give clear reference to matter being emphasized and where the disclosure can be found in financial statement. Third, indicate our opinion is not modified. EOM doesn't mean modified because many new shareholders, they will not understand modified report on a third class. I am just describing this. It is not a modified report. These 3 points you have to write. I don't think it will come, but still if it comes. Number one, include the paragraph in the auditor's report with separate heading EOM. Two, it should give clear reference to the matter being emphasized and where this matter or disclosure will be found in financial statement. Third, indicate our report is not modified. When auditor include other matter, give heading other matter. One more time, same thing. Whenever modified report is given, or EOM or OM or KM is given, okay, anything. What is KM? Key audit matter. When auditor includes EOM, OM or KM, auditor will talk with TCWG, circumstances that led to this paragraph and expected wording. Why you are including this? Sir, shareholder can better understand. Now they will request, sir, please leave. You can write in EOM separate that profit increase. Profit reduce, that don't write legal case. It looks very bad. Now that is your personal judgment whether you want to include or not. Okay. So talk with them regarding expectation. Sorry, regarding this expectation and wording of paragraph. Okay. Still 3 more standards to go, but all very simple. This is 2 times or what? No. This question we have done. It will not be in your magic book. You can take photo if you want. I hope you took module photo, or it is part of module also. This one I have included now, but you can take photo. Difference between EOM and that pending. Arun, wait, Arun. That standard is pending. No, that's the last one. Start. Chalo, start. Now, favorite question, Arun. Key audit matter. Okay. Communicating key audit matter in independent auditor's report. Okay. Before explaining Arun question, this is compulsory. It's applicable. Key audit matter compulsory for listed company when required by law. Tomorrow there is a law that for all telecom companies compulsory show key audit matter. Then we have to show. Very simple. Very simple. Okay. For all telecom company. So number one, applicable to listed company. Number two, required by law or regulation, then definitely so. Third, circumstances when auditor wants to show key audit matter. If you feel for this company you want to show, show. Okay, so 3 cases. Number one, it's applicable to listed company. Second, required by law or regulation. Third, circumstances when auditor wants to show key audit matter. What is key audit matter now? Come here. In 1 minute over. First definition. Key audit matters are those matters that in auditor's judgment are of utmost importance in the audit. People felt I am not doing audit properly. So this matter was utmost importance. This took my 70% time. Key audit matters are those matters that in auditor's judgment are of utmost importance in the audit of financial statement. This matter took my 80% time. You felt I did not work hard. I gave my life to this matter. Full time I was checking this. It was a very important matter, though it's not a modified report. Okay, understood. Sir, but I did not understand. Wait. How to identify key? Two things, sir. Now you asked doubt, so 2 questions I will solve. Number one. How to identify key audit matter? Matters told to TCWG. Do you remember? I will tell significant matters identified during audit. SIRF F, significant findings from audit. I told 25 matter to TCWG. Out of which matters which require significant auditor attention. Significant time went in 8 matters. Matters that are out of 8, 2 are most significant. That most significant is known as key audit matter. And significant is EOM. One last time. Matters told to TCWG. Matters that require significant audit attention. 8 matters. Matters that are most significant. KM. So which matter will come in KM and which will come in EOM? Please guide right now only. That you have to decide when you do to audit. When you sit for audit at that time, you have to decide which were most significant. It's a judgment, baby. But we asked Big Four people, can you give some, throw some color on this? They said we audited 150 companies. We found these 4 were always key audit matter. Why? They took our maximum time. Impairment of asset. Sir, why like this? In this, you have to calculate cash generating unit, CGU, if you remember. This all in CA final. No, AS28, CA inter. I don't know. Tax, significant matter. Goodwill impairment. How to check all this? AS28. Management itself misusing control. There's a fraud in revenue recognition. Percentage completion method. Okay, all these are significant matters. Out of which, how many to remember? 0. I hope you understood. One last time. 1, 2, 3. Matters told to TCWG. Matters that are matters that require significant attention. Matters that are most significant. Over. Now, nothing good to explain. This standard also super time pass. 2 question here, both hot, favorite. Out of which one came, so only one pending. That also comes usually in MCQ only. Okay, done. Why this standard came? Just to make it more big purpose. Never can come. To increase value of report. Provide additional information to user that help user in understanding those matters that are most significant. Communicating key audit matter help user in understanding entity and areas of management judgment. First question. How to identify key audit matter? This came just in last exam. Brilliant question. Okay. Factors to be kept in mind for identifying key audit matter. When you make a list of key audit matter, baby, this could become key audit matter. This could become number 1. Area of higher risk of material misstatement or significant risk as per SA 315. Wherever high ROMM is there, of course your time will go more, or significant risk as per SA 315. This could become key audit matter. Factors which help in deciding key audit matter. Area of higher risk of material misstatement or significant risk as per SA 315. Sir, had you not told also no, still I would have understood this. Very good. 2. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. Auditor judgment. Why? Because it involves management judgment. Why? Because these are estimate with high uncertainty. Example. Percentage completion method. All construction company revenue is booked on percentage completion. Now tell me this building is 42% complete or 48%. It's a judgment. Many times they try to show more. Why? So their revenue becomes more. It will take a lot of time. Tell me provision for, I was just listening, conference call. One company is their agriculture company, Best Agro. Not good company, drastic share price reduced 60%. But still I was listening to their con call. They were saying our profit will increase by 40 crore this year. Then all people asked out, why? Understand, last year there were a lot of sales return. This year sales return are not there. It's like, why? Last year forcefully we kept the product to retailer. Take. Now we are not forcing retailer. If they want, they will. So last year when we forcefully kept, what happens? Then year end we get a lot of sale return. So company becomes loss. Now auditor, what they have done? They have taken sales return, provision for sale return 50 crore. But this year we have not done only like that. Sale return will be maximum 10 crore. So 40 crore profit we will get. 2-3 times you have to listen this. Did you found this hard? Yes sir. Very good. That is why it's a significant matter. Had you understood, it will not become significant matter. Then it will become normal matter. You did not understand. No. Very good. It is a key audit matter. I hope you understood. Those matters where judgment is required. Okay, it will take your maximum time. Auditor judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty, percentage completion, revenue. Tell me in OYO, when will revenue be recognized? When you book a hotel? When you do entry in reception? When you go to the room? When you do checkout? Because refund you can ask anytime. Judgment. Auditor judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. Last, T. Significant event or transaction occurring during the period. What's a significant event? Merger of company. Huge complication. AS14 will apply. You acquired a company. Triple complication. Your whole time will go in this only. You sold a company. Triple time will go. It's always a key audit matter. So tell me, while identifying key audit matter, factors to be kept in mind. RAT, rat. Okay. Area of higher risk of material misstatement or significant risk as per SA 315. 2. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. T. Significant event or transaction occurring during the period. Sir, one more time. How to determine key audit matter? Keep in mind. This I don't know why am I speaking too many times, because very important. Though it is asked in exam, it may come as a MCQ. Of course, same question impossible. How to identify key audit matter? RAT. Number 1, area of higher risk of material misstatement or significant risk as per SA 315. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. T. Significant event or transaction occurring during the period. 5-second break. So you don't need to learn only for one exam, don't learn. But MCQ can come, so understand. This could be key audit matter. Time up. Now this is a good question. This though of course big yes it can come in exam, but mostly as MCQ. Key audit matter and EOM. Are you listening? Key audit matter and EOM is not a substitute for three things. Key audit matter and EOM. You can show as extra, but it is not a substitute. Okay, what is substitute? Instead of this, I will do this. No. Key audit matter and EOM and OM is additional requirement. It's not a substitute for number 1. Separate opinion is required on individual matter or disclosures as per FRF. See, whenever you have to give separate opinion on related party, fraud, CARO has to be separately shown. You cannot write key audit matter. We have checked CARO. Okay, baby, you have checked, but write in CARO separately all points. Whenever there is a fraud, there are specific requirement of reporting. We cannot write, we have found a fraud. Okay, you can write, but it cannot substitute when separate opinion is required on individual matter or disclosures are compulsory as per FRF. When FRF is told, you have to show that. You can write EOM separately. But it is not substitute when separate opinion is required on individual matters like fraud, like CARO, or disclosures are required as per FRF like a related party. Second, modified report. Many people will write, we have found this matter. No. If it is material, then you have to directly write in modified report, material and pervasive adverse. EOM is not a substitute for modified report. Real life, what happens, I will explain you. That is why this question came. Real time, I cannot give qualified report. Why? The day I give qualified report, I am gone, out of audit. They will not pay me fees also. These people are very rude, all management. Or they may pay fees to me, okay, but next year definitely they will not select me. No problem, sir, another audit. You don't get audit. There are so many CAs in market. Then your children school fees, eating fees, drinking to no drinking, water fees. Okay, how you will survive? How to survive? So in between we want a solution. So what these people do? They write in EOM paragraph. We have checked provident fund in detail. There are small mistakes, but we believe our opinion is not modified. Maybe it is modified only. They cannot give modified because they are afraid. Not afraid. Majboor, lachar, very much dependent due to their family. So usually this happens. So that is why they wrote EOM is not a substitute for modified opinion. When modified opinion required, give it. Family go to hell. Family is not important. Institute important. Last. Then there is material uncertainty relating to going concern. When going concern, there is a doubt. It's invalid or there is material uncertainty. There is a separate point in audit report. Maybe don't write in EOM. Title, addressee, opinion, basis of opinion, going concern. Right there. It's not a substitute for going concern. You cannot say there is doubt on going concern. Okay, you can write here, but write in going concern point. Understood. Standard very strict about these 3 points. Key audit matter and EOM is not a substitute for, oh my god, Separate opinion is required on individual matter or disclosures are required as per FRF. M. Modified report has to be issued as per SA 705. G. When there is material uncertainty relating to going concern. At that time, you can write in EOM, OM, but it's not understood, sir. You can write in EOM, but doesn't mean you don't write there. We need to write at separate places. EOM is extra, KM is extra. So last 3 questions. Key audit matter, EOM and OM is not a substitute for. Oh my God! Separate opinion is required on individual matter or disclosure as per FR. Modified report has to be issued as per SA 705. Okay, last, a substitute for reporting for going concern when there is material uncertainty. Learn nicely. Only this question seems like it can come if normal paper comes. Chalo, done? Yes, sir, fully done. Moving on. Done. Tell me, what is EOM and OM and KM is not a substitute for 3 things. Oh my God. Separate opinion is required on individual matter or disclosures as per FRF. Modified report has to be issued as per SS 705 when there is material uncertainty relating to going concern. Over. Now, time pass question is given. What is the language when you write this? Key audit matters are those matters that are most significant in the audit of financial statement. Second, these matters are addressed in context of financial statement as a whole, and we don't give separate opinion on this matter. Means while auditing whole statement, I found this matter. I am not giving separate opinion on them. Any doubt? No doubts. No doubt, sir. With this, last essay is pending. Are you in mood now? We shall finish this. And then one more easy is there, but okay. Let's finish this. Good essay, this one. This one comes, this one also comes less, but when it comes, it gives full marks. Okay. So like that, it is offbeat essay. If nothing good found, then every 5-6 attempt they find this. I think this came before 2 exams. Till now, how many are done? All the biggies one done. 1, 2, 3, 700 forming an opinion and reporting. SS 705 modified report. 701 communicating key audit matter in independent auditors report. 706 EOM and OM in independent auditors report. In this, practically there is one question, but other questions you may find, okay, which are MCQ or understanding one. Start. Very simple. Comparative information, corresponding figure and comparative financial statement. Let me explain first of all. What is this essay? Tell me, our profit is 50 crore. Is it good or bad? Type fast. Profit 50 crore, good or bad? Only 2 things you have to type. 50 crore profit and 1000 crore revenue, good or bad? Depends. You have to compare with last year. Any figure alone I can never know whether it is a good figure or bad figure. I will know that figure when I compare with the last year. Let's take an example. Okay, last year my profit was, okay, 40 crore. This is 50 crore. Very good. In CA Foundation, I got 250 marks. In CA Inter, I got 500 marks. Very good. Are you clear? Because percentage improved. Alone figure you cannot tell. But when you compare with last year, we can easily relate to that figure. Last year, our revenue was 1000 crore. This year, 100 crore. Very bad. That's a 90% fall. Last year profit 500 crore. This year 50 crore. Very bad. But last year 10. This year 50. Oh my God. So alone figure are difficult to judge. But when you compare with last year, it's easy to know. That is what is given. There is a standard. Whenever you give comparative information, this is current year, this is last year. There are two approaches. Let me explain in one line. Corresponding figure and comparative financial statement. Just listen one line. In corresponding figure, I give audit opinion on this year only. Last year is just for reference. Very good. But in comparative, I give opinion on each year for which financial statements are presented. My audit opinion is for each year. If 5 year is given, I am auditing all 5 years. Which to follow? Point number one. Given by law, regulation, FRF. Law will say, regulation will say, terms of engagement will say, okay, by mistake, if they are paying you 10,000 rupees fee, will you check 5 year financial statement? Crazy ki yaar hai? No. I will only check for current year. Last year, whatever figure they give, I will put. Are you clear? But, if you are going for IPO listing, we need to compulsory check last 5 years or last 3 years. At that time, I have to follow this approach. So it will be written in terms of engagement or law or regulation. Example, if I'm getting a Schedule 3 audit, Schedule 3 tells me you have to check this year only. Last year is just for reference. But when I go for IPO audit, compulsory I need to check all years. 1, 2, 3, standard, almost over except one question. Whenever I give comparative information, there are two approaches. Correspond, how to remember lifetime. See, correspond means what? Just for comparison, time pass. But your financial statement word written, it means I will audit. Cheap way to remember. Let's speak one last time. Comparative information has two children. Corresponding figure, comparative financial statement. Let us speak. In corresponding figure, my opinion is on current year only. Baby, last year is just for reference. In comparative, I give audit opinion for all year for which financial statements are presented. Now I will just read everything and I'll tell you that one question. Nature of comparative information depends on FRF. Okay, what does your FRF tell? Schedule 3 tells check current year only. IPO tells all year. There are two broad approaches, corresponding figure and comparative. Most important line for understanding. Which approach to follow is given by law, regulation or terms of engagement. Sometimes they will pay you money. We are paying 8 lakh, check all year. Okay, we will check terms of engagement. Two broad approaches are there. For corresponding figure, auditor opinion refer to current year only. Previous year is just for comparison. Comparative. For comparative financial statement, our opinion is for each year for which financial statements are presented. Okay. Here we have given opinion for all figure. Very good. Now, two potential questions can come. In exam only this comes, this one. Okay. But according to me, this is also good. It can come. Okay. So two questions only to do here, nothing else. Understanding comes, then too good you are. Audit procedure regarding comparative information. I will ask a question. This is which approach, first or second? Second, wrong. This is heading. So question can come on heading only. What are audit procedure for? This is dad. It has two child. Okay. So this is heading. Audit procedure regarding comparative information. Auditor shall see financial statement include comparative information as per FRF. Is corresponding required, that is followed. Comparative financial statement, that is followed. Okay. For this purpose, we will check 2 points. Remember, just 2 points. Comparative information agrees with amount and other disclosures of prior period. Whatever comparative information, it should match with prior period. Check that. Comparative information agrees with amount and other disclosure of prior period. Accounting policies reflected in comparative, that's last year, is same as current year. Accounting policies are consistent, and if there are changes, they are properly accounted, presented, disclosed. Over. Nothing good that I can explain. Okay, what are audit procedure regarding comparative information? Comparative information agrees with amount and other disclosure of prior period. Accounting policies presented in current year are consistent with prior period, and if there are changes in depreciation policy, inventory, effect is properly accounted, presented, disclosed. Retrospective or prospective as told by AS. This less chance. This favorite question, I mean, if they want to ask, looking at past record, this is the only question they ask. Except understanding, anything can come. Listen, let's take break 2 seconds. Welcome back. When I give corresponding figure, I check current year only. I don't give reference to last year. In corresponding figure, our opinion is on current year only. Last year is just for reference. But there are exceptions. In these 4 cases, I also give reference to last year. I think you need break, sir. Right now you told that we will not give reference. Understood. But these 4 cases we will give reference. That is why question is made. Oh, so these are exceptions. Yes. One last time. When corresponding figures are presented, auditor opinion will not refer to corresponding figure except in 4 cases. I hope you understood question. One last time. When corresponding figure are presented, our opinion is on current year only. But English. In these 4 cases, we also give opinion of last year. We will give reference to last year. Very simple. Very simple. Number one, last year financial statements are not audited. Then we write in other matter paragraph. We will write in other matter paragraph, last year financial statements were not audited. Just reference I am giving. Second, they are audited by another auditor. Instead of Manoj, Saroj did audit. I will give reference, last year audited financial statement are done by another auditor. I am giving a reference. Okay. Third, if I obtain a evidence that there is material misstatement related to prior period, related to last year's, okay, I can find a material misstatement on which clean report was given. Last year I gave clean report, but there is a big mistake. Then I will write, this year I am giving qualified or adverse report. Why? Due to prior period material misstatement. Read. If auditor obtain evidence that material misstatement exists in prior period on which unmodified report was issued, auditor will see issue is solved. If not, give qualified or adverse report and write in basis of opinion, it is due to material misstatement of prior period. Last point. So I have to give reference because it's a last year mistake. If the previous year we gave qualified, disclaimer, adverse report, and issue is still not solved, this year also I will give qualified, disclaimer and adverse report and mention both current year figure and last year figure, okay, in basis of opinion which gave rise to modification. I hope you understood. All 4 points are super duper logical. One last time. When corresponding figure are presented, listen no sir, I give opinion on current year only. But in these cases, I give opinion on last year also. One last time. When corresponding figure are presented, I give opinion on current year only. But in these cases, I will give reference to last year. Prior period financial statement not audited. 2. Audited by another auditor. Third, I find material misstatement related to prior period on which unmodified report was issued. Then this year, I will give qualified or adverse report and write in basis of opinion. It is due to material misstatement of prior period on which unmodified report was issued. If this year we give, even previous year we gave qualified, disclaimer or adverse report and the matter is still not solved, then this year also I will modify and give qualified, disclaimer, adverse report and write current year figure and corresponding figure. If not possible effect, okay, in basis of opinion. How to remember in one line? 1, 2, 3. Small break. Let us start. Tell me. In corresponding figure, my opinion is on current year only. But in these cases, I will give last year financial statement not audited. 2. Audited by another auditor. Last year, okay, we gave clean report, but I found prior period material misstatement. Last year we gave qualified disclaimer, adverse report, and matter is still not solved. Any doubt? Can we trust on prior auditor's work or we must check again? Good question. Depends on fees. Are you clear? If you are not getting money, ultimately you have to look at yourself also. Opening balance is our responsibility. Rest, I don't have that much time that I will be emotional in one only. Are you clear? Fees also is proper work you have to do. Over. This though will never come. Just read. In this amount and disclosure are included. In this, our opinion will refer to each year. When reporting on prior period financial statement, while you are checking last year, okay, but you feel opinion should be different, then write in other matter. Last year qualified report, but we feel clean report will come. Just read. When reporting on prior period, auditor opinion differ. Auditor will write in other matter. Why his opinion differ? Oh, superb. Still time is left. Oh, I thought how time left, how time left, this duty question is pending. Chalo, what is the mood? Shall we go ahead? Or enough? Let us finish the left side and then take a break. Okay. Joint audit. What is joint audit? Very simple. First of all, how to remember? 9 and 9. 2 both came together to do audit. Very simple. 9 and 9. 2 both came together to do audit. Two people, 9 and 9 came together. What is joint audit? It is pulling together resources and expertise of more than one firm to do a specific job in a given time, which is difficult to do individually. One more time, it is pooling together of resources and skill of more than one firm to do a given job in a specific time, which is difficult to do individually. Can you tell some example? Yes. Reliance audit is done by two people. One is Chaturvedi, another is Big Four. Why? You have to give report in May. It's very less time. So better two people come together. In France, there is a rule. Whenever consolidation is done, it means consolidated statement. Joint audit is compulsory. So what's the benefit of joint audit? Responsibility will be shared. Better work will be there. I can get consultation from two people. Very simple. It means pulling together resource and expertise of more than one firm to do a job in a given time, which is difficult to do individually. This chart is not there in magic book. Yes, newly made, I will share. Yesterday chart also I forgot. So in case I forget, please type hi. I will send. I forgot. This also I will share. That one also I will share, which I forgot on Saturday. Start. First question. Joint audit plan. Before starting joint auditors will develop a joint audit plan. In that, what they will write? In developing plan, number one, identify division of separate area and common area. Who will check payroll? Who will check sale? Who will check purchase? Separate area. And who will check common? Common. Identify division of separate area and common area. Second, consider and communicate among all joint auditor factors that are significant in directing team effort. Tell to the team, this factor very important. There's changes in law here. Check this. Impairment can be there. Consider factors that are significant in directing team effort. A certain reporting objective. When do you have to give report? When will you communicate with staff? When review will be done? Reporting objective should be clear. So we will do audit accordingly. Ascertain nature, timing, and extent of resources required to do engagement. How much our staff will be required? How much their staff will be required? It should be very clear. Nature, timing, and extent of resources required. Consider results of preliminary engagement or similar engagement done earlier. Last year we had done this audit. What risk we found? Okay. Or similar audits we have done in pharma sector. Did we find any risk? Now, I explained you, but this is copy paste of audit strategy. That we use the technique audit kit ERP. It is same. Absolutely same. One difference is there. Who can tell? There is one difference. Who can tell? There is one difference. Who can tell? Of course, first point is different. Don't tell that. Okay, first point. The difference is, okay, joint audit plan, there is no explanation given here by module. It's a module question. Okay, their explanation was given. So that's the difference. Chalo, joint audit. In developing joint audit plan, what we will do? In developing joint audit plan, what we will do? Audit ki TRP. Very simple, in 1 minute over. Identify division of separate audit area, common audit area. T. Consider factors that are significant in directing team effort. R. Ascertain reporting objectives of the engagement. Next, a certain nature, timing, and extent of resources required to accomplish engagement. Consider results of preliminary engagement and similar engagement done earlier. How much ever time you want, we can speak. Very simple. In developing joint audit plan, we need to keep in mind audit ki TRP. Audit. Identify division of separate audit area and common audit area. T. Team effort. Consider the factors that are significant in directing team effort. R. Ascertain reporting objectives of the engagement. One more R. Ascertain nature, timing, and extent of resources required to accomplish the engagement. Consider results of preliminary engagement or similar engagement done earlier. Learn very nicely, super duper simple, too easy. Chalo, done. 1, 2, 3, 4, 5, 6. Let us start. Tell me, joint audit plan. Identify division of separate audit area, common audit area. Consider factors that are significant in directing team effort. Ascertain reporting objectives of the engagement. Ascertain nature, timing, extent of resources required to accomplish engagement. Consider results of preliminary engagement activity or similar engagement done earlier. Now, we have to issue common, listen, 1 minute, listen. We have to issue common audit report. Both joint auditor will give common audit report. But if you have doubt in any area or you have conflict regarding any area, you feel qualified report will come, adverse will come, then give separate report. When you give separate report, give reference to the other report. That other joint auditor report also refer, because it is different from our report. Over. Only MCQ can come. It should be noted, joint auditor will give common report. However, when joint auditor are in disagreement with any point or any matter, they will give separate report. If you are in disagreement with any point or any matter, give separate report. In such circumstances, also make reference to others' audit report. Normally give common report, but if you are in disagreement to any matter or anything, okay, give separate report. When we give separate report, give reference to the others' report. From here, this is what type of essay, unimportant essay. And last time question came, so I think zero track record is there. I don't think it can come. Advantage came. Shall we learn this because it came last time? Why to do the such question after break? You want to finish this? It came last time, so definitely it will not come. So let us finish. But we still have to do. N means no, don't do. We will read no once. You don't have to learn that much, but still it can not come because this comes in 7-8 attempt once. Advantage of joint audit, we will learn this and leave. Over. I will just explain all points. Sharing of expertise. Advantage of mutual consultation can be that I can ask, one firm can ask another firm. Better quality of performance will be there. Client will also receive best level of service. Two best firms are coming. Okay. Workload will be lower. Why? Work will be shared. Lower staff development cost. You train one staff, they will train another. Lower cost to carry out the work. Arey yaar, sorry. Start. Lower cost to carry out the work. Why it is shared? Only one point is little good, this one. Displacement of auditor, taken over in takeover, often prevented. What is displacement? See, there are two companies. A audit done by Shahrukh, B is done by Salman. Now A is taken over by B. A taken over. So B's auditor unemployed. No, both can do joint audit of A in English written. Displacement means removing of auditor. Taken over in takeover. Now prevented because joint audit can be done. In respect of multinational firm, work can be given to local firm. You have 8 subsidiaries in US. Do joint audit with US firm. They know their laws better. Last, healthy competition will be there. Someone will do good work, we will always feel, Arey yaar, I could also have done. They have so much knowledge about ROMM, etc. Okay. Let us still try to learn 5 points. Sharing of expertise, advantage of mutual consultation. Sharing of expertise, advantage of mutual consultation. Better quality of work, better performance to client. Better quality of work, improved service to client. Better quality of performance, improved service to the client. Remember till here. Done. Advantages of joint audit. Very simple. Sharing of expertise, advantage of mutual consultation, better quality of performance, improved service to the client. 3, lower workload, lower staff development cost, lower cost to carry out the work. One more time. Lower workload, lower staff development cost, lower cost to carry out the work. Last, displacement of auditor, taken over in takeover, now prevented. Now auditor will not be displaced. Displacement of auditor, taken over in takeover, prevented. In respect of multinational company, work can be given to local firm. In respect of multinational company, work can be given to local firm. Sense of healthy competition. Sense of healthy competition. Seems good? Let us try to learn 5 points. Sharing of expertise, advantage of mutual consultation, better quality of performance, improved, how better quality? Consult you are doing, improved service to the client, lower workload, lower staff development cost, lower cost to carry out the work. Displacement of auditor, taken over in takeover, now prevented. In respect of multinational company, work can be given to local firm. Healthy competition. Disadvantage, fees will be shared. Psychological problem, if someone does good work, no, then also we feel bad. I don't know anything. Okay, psychology will be. So if your friend passes, you are happy. But if he gets more mark than you, then you are unhappy. I am more intelligent. How he got? How? Many times I get called. You will be shocked at what they tell. Sir, my friend did not read and he passed. I read and I failed. No one is like that. He is just faking. He must have read more than you. He doesn't tell you. Like that it is. We are not happy also. Our friend passed and if we fail, go on. Both pass then okay. But mark should be 1 mark less than me. Indian mentality. Only mine or yours also I don't. Yours is there only because we get call. So we know. General superiority complex of some auditor. Some auditor, we are big four. Bhai, go to hell. Problem of coordination can be there. Common areas could be neglected. Who is ultimately liable? Uncertainty about liability of work done. Over. Nothing good. Never come and this standard will not come. So much we studied, but time did not pass only today. God knows how. Superb. What time we come back? Reply fast. More than enough studied. Depends what is the mood. No, CARO is not there. This question is pending. Who will teach this? First I will teach this. 10:10. See you at 10:10. We'll finish this. CARO, what I feel tomorrow also small chapter, but little heavy it doesn't become. I will only explain applicability of CARO because CARO can definitely come. Only application points will do tomorrow. Okay. Only application. If mood is there, not there, then shift tomorrow. No worries. But this will take 10 minutes only. Okay. start. See you tomorrow. See you right now after 10:10. Bye. This is extra, so I'm showing you. See you 10:10. Chalo, start. Welcome back. Let's start. Now Friday should be our end. I think no, Saturday not needed. Enough syllabus is done and only little portion pending. I think only after today 3 chapters are left. Let's start. Duties of auditor. This is an extra part. After that, CARO little we will discuss applicability and leave for today. Concentrate. Duty means what? With great power comes great responsibility. We have lot of rights given to auditor. That is not part of our syllabus. It is given in company law. Right to audit books of accounts, etc., etc., etc. Right to access voucher, etc. But if you get right, you have to follow duties also. So these are duties of auditor. God knows duty why given, because it's duty to report, maybe that is why. Okay, so duties of auditor. Same thing is also there in company law, okay, but given here also, so we have to study here. First point is duty to inquire on certain matter. I will do inquiry on these matter. If answer is normal or positive, nothing to do. If answer is negative, only then I need to report. One more time. Duty to inquire on certain matter. If answer is positive, blank. If answer is negative, only then I need to report. See, what are the matter? Whether loans and advances made by the company are properly secured and terms are not prejudicial to company's interest. What do you mean by loans and advances? Secured it should be. See, all the loans, proper security is taken. Terms are not harmful. What can be harmful term? Big loan without any date of repayment, not taking proper security, giving loan at very low rate of interest. All these are harmful terms. Okay, so first you have to check loans and advance are properly secured, terms are not prejudicial, harmful to company. If all loans and advance proper, then this point will not come. Two, whether book entry transactions are compromising to interest of company. Sometimes we just pass book entry. Book entry means what? Ram to say. No money is received. Are you clear? So book entry transactions are done. Third, any investment company has done in share, debenture, security. Is it sold below cost price? Investment you have to do, that is allowed in life. Share, debenture, security. But most important, don't sell it below cost price. Except investment and banking company can do. Why? Because they do it every day. Every 1 hour they have new investment, purchase, sell, purchase. So loss can be there. But if you are investing, why are you selling below cost? Have you done some fraud? Are you engaged in some adjustment with someone? Okay, so any investment is done in share, debenture, security. Are they sold below cost price? Except investment and banking company. For them, it is allowed. It is their business. Second, fourth, whether loans and advance are shown as deposits. See, loan, advance, deposit. Let me explain difference between the all three. What is loan? Given to director, given to related party, given to employee. What is advance? It's usually for business. Raw material they are not supplying, so they are giving advance. Advance is made for machinery payment, unique machine. Okay, so advance is for business. What is deposit? Surety for future. Library you pay deposit. PG you pay deposit. Okay, certain thing you need, you pay deposit will surely be received. In school we used to pay deposit, caution money, it will be received. So auditor doesn't audit deposit much because he knows it will be received. So sometimes what I do, I give loan but write as deposit, so auditor won't check. Have I done such thing? Loans and advance are shown as deposit. Personal expense are charged to revenue. I go on a date with my wife, but charged to company's account. Not allowed. I go to Europe, charged to company's account. Okay, not allowed. Okay. Whether shares are allotted for cash, adequate cash is received. If it is not received, position is shown in books of accounts as calls in arrears. Okay, simple. So if I have done these things, nothing to write. If I have not done, then only I will report. Again, I want to tell. If we are doing all these things, nothing will happen. If we are not doing, only then we need to report. I think you have heard these points. Okay. Now, if you want, we can learn, but no need to learn, but still will learn. Duty to inquire. Tell me, auditor will inquire in which matter? Why this will not come? It is in company audit. A, B, C, D, E, F. A, B, C, D, E, F. A. Whether loans and advances made by company are properly secured and terms are not prejudicial to company's interest. B. Whether book entry transactions are prejudicial to company's interest. C. Whether investment is done in the form of shares, debenture, other security. Are they sold below cost price? C for cost price, except investment and banking company. D. Whether loans and advance are shown as deposit. Whether shares, whether personal expenses, E for expenses, are charged to revenue. Whether shares are allotted for cash. F for cash, adequate cash is received. If not received, position is shown in books of accounts. Just read once. If you want, I can speak once. A, B, C, D, E, F. What is A? Loans and advances. What is B? Book entry transaction. What is C? Okay, below cost price. D. Loan and advance are shown as deposit. Personal expenses. Shares are allotted for cash. If you want one last time, English you can make loan and advances, but it will not come. Book entry transaction. Okay. Share debenture below cost price. D. Loan and advance are shown as deposit. Personal expenses. F. Shares are allotted for cash. Next duty is to sign audit report, I know. Next duty is to comply with auditing standard, I know. Next duty is to audit report. See, I need to compulsory report on these things. Inquire was what? Voluntary. Not voluntary. If I find doubt, only then I will report. Because I will inquire on these things. If doubt, I will report. But here, compulsory I need to report. Compulsory. Okay. On what things? We will just read once. Whether auditor has obtained all information and explanation necessary for the purpose of audit. Did you get all information explanation? Second, whether proper books of accounts are maintained and returns are received from branches which are not audited by him. Yes. Any qualification, reservation or adverse remark on maintenance of accounts, any weakness you found. Whether branch audit report is sent to company auditor, how he has dealt with it. Whether balance sheet and P&L are matching with books of accounts. Whether our financial statement comply with accounting standard. Observation or remark on adverse functioning of the company. Any director is disqualified from appointment as director. Whether company has adequate internal financial control and operating effectiveness of control. See, all these are time pass point. From here, one MCQ can come. So let me explain you. Whether, see, earlier our responsibility was only one. What? Give audit report. But these days it is not audit report. I also need to see whether there are adequate internal financial control and operating effectiveness of the control. Are they operating properly? One more time. Earlier, I only gave audit report, but now responsibility have changed. It can be asked. Auditor is responsible for internal control. Big yes. Okay. We are not, sorry, wrong. Again, I want to speak. Earlier, our responsibility was only giving audit report. Now our responsibility is also checking, not internal control, internal financial control, financial department control. What are financial control? Maybe authorization, okay, access, okay, maybe audit. So company has to check there are adequate financial, internal financial control and operating effectiveness of control. Tell me what is important, coming to lecture or studying? Both. So control is there and operating effectively. One last time, I have to check whether company has adequate internal financial control and operating effectiveness of such control. MCQ can come. But. See, small businessmen are frustrated. In India, what is there? Business is there or not, but compliances are huge. Do audit, do IFC. You will be tired. So it's not applicable to small companies. Which are small companies? Come here. Requirements of internal financial control are not applicable to private company. Which one? One person company, small company. One person company, small company. Company which has turnover less than 50 crore and borrowings less than 25 crore at any point of time. Turnover will be highest in year end only, but borrowings 25 crore. So if you are one person company, small company, or if your company which has turnover less than 50 crore and borrowings less than 25 crore, then exemption is given. No need to do IFC, only audit report. If any one point also not fulfilled, Borrowing is 26 crore in June, gone. For one day, 27 crore, gone. Turnover 51 crore, gone. So many people intentionally, if it's coming 50.2 crore, they will show 49.9. Why? Escape from third class things in life. I hope you understood. 1, 2, 3, start. These days, we don't have to give audit report. Auditor also has to report on internal financial control, whether they exist and operating effectiveness of control. Not applicable to one-person company, small company, company which has turnover less than 50 crore and borrowings less than 25 crore at any point of time. One more thing I want to tell sir. There are three words which we have to study. Internal control, you know, it is applicable for all departments: production, finance, marketing, HR. Internal financial control are only applicable to finance department. But when auditor comments on those internal financial control, listen nicely. When auditor comments on internal financial control, why he will comment? Because he's told in this point. When auditor comments on internal financial control, it is known as ICAI, internal control over financial reporting. Okay, so just I am explaining you the word one last time. Internal controls are set up by company for all department. Internal financial control are controls set up by management for finance department. When auditor comments on this, we call it internal control over financial reporting, applicable to all company except three: one-person company, small company, companies having borrowing less than 25 crore and turnover less than 50 crore. Over. Last point: duty to report on fraud. Very important. Only MCQ. Time pass MCQ will come. As per section 143.12. What is 143? I love you. One is I, one letter word. Love, four letter U. I love you. 143.12. Okay. As per section 143.12, read with rule 13. How do we say? प्यार ने 12 बजाई. Rule 13 के साथ. PR is 143. As per section 143.12, rule 13. MCQ will come. If auditor, during his duties as auditor, while you are doing audit, if you have any reason to believe there is a fraud, not error, intentionally fraud, which involves or is expected to involves or fraud is going on, you feel total amount could be 1 crore or above. That is not important. Individually, fraud should be of 1 crore. They will say fraud is of 50 lakh, 40 lakh, 30 lakh. No, then don't report. Individually, fraud is of about 1 crore. Is being committed or has been committed, is being or has been committed by officer or employee. Who is doing the fraud? Officer or employee. We will report to central government. Why this is important? Because reporting is done to Modi, Narendra, central government. Okay, so very simple. As per section 143.12, read with rule 30. If auditor, during performance of his duties as statutory auditor, has reason to believe individually one fraud is being or has been committed, individually it is of 1 crore or above. 1 crore or above, okay, is done by officer or employee, we will report to central government. Why important? Because central. Below 1 crore, we will report to audit committee or board. Over. I hope it is clear. Individually fraud 1 crore, they will ask, do we need to report? Yes, as per section 143.12. With this is also done. Less than 1 crore by officer or employee, whom to report? See here. Audit committee or board. Audit committee or board. Any doubt? No. Done. Now we are moving on towards the last part. Okay. That is CARO. Anything comes or not, but from CARO question can surely come. Okay. So chapter I told is of 15 mark, but you can assume it's of 10, 12 mark. 2, 3 marks point or 4 marks point CARO can come. Okay. But there are cases when CARO has not come also. It's not that CARO will be asked. It did not get asked in last to last exam. Last they asked, I think. Okay. So let's start with CARO. CARO, if you want, we will do inside points. Okay. If you don't want, we will do intro and leave. Intro is also big. With this biggie chapter over. Tomorrow the chapter is little smaller. Not little smaller. It's a 1 hour 45. So we should finish before 2 hours. And then CARO pending part we will do. What is CARO first? Let me explain. Company Auditor Report Order. One more time. English listen. Company Auditor Report Order. Central government met with NAFRA people. Okay. Tomorrow, of course, we'll continue CARO. So listen very nicely. Central government met with NAFRA. What is NAFRA? National Financial Reporting Authority. What these people do? They basically try to identify how accounting and auditing can be better. Wherever fraud is there, okay, auditors should know, so shareholders money is not lost. So NAFRA basically does what? Better accounting and auditing. So central government met with NAFRA. They said why frauds are happening. NAFRA said fraud basically happens due to these many reasons. These are hard to catch, but let us do additional reporting for company. Every company has to compulsory give opinion on 21 points. If a shareholder will read these 21 points, no, okay, then definitely any fraud could be catched. Mostly fraud is done in 21 points only. If shareholder will read CARO, no, 101% there is zero chance of fraud. Of course, it will not be written there is a fraud. Okay, you have to catch these 21 points are those points which are already covered in audit, but separately CARO is given. So central government in consultation with NAFRA has given additional requirement for company only applicable in India, because in India only fraud people are there. Abroad also there, but comparatively less. Abroad might be some other requirement. So it additional requirement. You understood now? Reporting on other legal requirement. CARO is part of that. I hope you understood logic now. One more time. Central government in consultation with NAFRA met and given certain additional requirement for company. 21 points. CARO 21 points. CARO 2020, but points are 21. Why 2020? This came in 2020. Again in 2025 it will be revised. Why? Because some new fraud points will come, so they'll include 2-3 points extra, remove 2-3 irrelevant points. I hope you understood. Now sometimes this will come in inter as well as final it will come little detailed. Inter, a simple question. CARO doesn't change. Okay, so questions come on applicability only sometimes. So we should know it's applied. Tell me, it will apply to whom? Bigger company. Smaller company, Caro, Pharo, what they will do? They will be tired. They are like, shall we do business? Shall we do audit? Shall we do IFC? Shall we do Caro? Shall we die now? Business is not happening in small company, and so many compliance in India are there. So that is why small company we have escape. Okay, which are small in India. Very simple logic if you understand. Where public interest is not there, it shall apply to all company including foreign. Foreign company doing business in India apply, but it shall not apply to one person company. Why? Name only one person. We brought this so one people can also start company. Now we will tell CARO, then he will cancel, let us not form. So CARO exemption is given. Second, small company exemption given. Section 8, not for profit company. What you will do fraud? You are not for profit, exemption given. Insurance company, already dad of insurance company has given 2800 law to insurance company. Now one more CARO also we will give, they will also die. So insurance company given. See, government will cover those which are left out. Insurance company, already enough rules are there. Private limited company also exempt, few private limited. Banking company also exempt. Why? Because RBI has given 4800 requirement for them. One last time, for whom does it escape? One will speak. One person got his Samsung S8 insured from a private bank. One more time. One person, don't try to learn, like that also you'll remember. One person got his Samsung S8 insured from a private bank. One person company. Samsung is a small company. Section 8, not for a profit company. Insurance company, private company, banking company. Insurance company, private company, banking company. First question. In banking company, foreign bank also exempt? Yes. Foreign bank, CARO doesn't apply. NBFC, non-banking finance company, is not a bank. So CARO applies. Such hard question will not come, but still. Insurance doesn't apply. Now. Listen, CARO will apply to private company if certain private company are exempt. Certain CARO applies. Listen, you first of all don't read, otherwise you will get 100% confusion in this. So I want to ask one question. CARO will be exempt for which private company? Smaller private company or bigger company? Reply this much. CARO will be exempt. For which company? Smaller or only understand smaller. Don't try to learn English. If you more you fall in English, no, you will fall. English not required. Only use brain. Okay. So CARO will be CARO applicable to private company if applicable if it is holding or subsidiary of public. See, if your holding or subsidiary is public, let's take an example. I am a private company, holding company is Reliance. So sometimes Reliance cannot do a fraud. It will do fraud in my name. Everyone NAFRA understands. NAFRA champion. CARO apply to you. Why? Because your dad is public. Sometimes I am very smart. All these rule come no. Let me form subsidiary company. My subsidiary is public. Subsidiary will not do fraud. It will tell holding you do fraud. You are private, no do fraud. CARO will apply. Why? Because my subsidiary is public. If I have any relation with public above or below, CARO will apply. No need to check further points. So for CARO to be exempt, it should be holding or subsidiary of private. Is your holding or subsidiary public? Then don't check further points. Game over. If your sir, my holding and subsidiary private, said I check further point. Yes. This is the main point. Moving on. Other points are what? Paid up share capital and reserve is less than 1 crore. Exemption applies. Paid up share capital and reserve is less than 1 year more than Y return. It will apply if it is more than that. Borrowings from bank or financial institution does not exceed 1 crore. If more, then gone. More, then gone. Father and children probably gone. Borrowings are more than 1 crore gone. Revenue as disclosed in Schedule 3 should not be more than 10 crore. So how do I remember in one line? PBT 1110, PBT 810, PBT 1110. What is P? Paid up share capital and reserve should not be more than 1 crore. Borrowings from bank or financial institution should not be more than 1 crore. Turnover as defined in Schedule 3. Total turnover should not be more than 10 crores during immediately preceding financial year. If above, below, private, and all these three conditions met, then I will be exempt from CARO. My fees of auditor will be less. If CARO applicable, auditor more fee. Audit fees, IFC fees, CARO fees, other so many fees, and we have to hide your fraud. That fees also required. Okay, 4 fees he will take. I hope you understood. Very simple. Don't fall in English. One last time. CARO will apply to private company or no? Sir, it will apply. It will apply if any relation with public. If no relation, then 3 points. PBT 1110. Paid up share capital and reserve is less than 1 crore. Borrowings at any point of time is less than 1 crore. Turnover during immediately preceding financial year exceeds 10 crore. Any point broken, CARO will apply. Why? Because you are a big company and only a dash can do fraud. Big people. Small people are very good in life. Okay. A person who cuts hair, he will do fraud of what? 10 rupees extra, he will ask 20, 30. But big people, chore they are. Now, let us go in detail if by mistake sum comes in exam. Sums. Sum also comes. Anything can come. Oh, most important, 1 mark MCQ. CARO doesn't apply to consolidated financial statement. Why? It is applying to standalone. I have 89 subsidiary. All 89 are following CARO. Now in consolidation again I will show CARO or what? Then 21 points of 81 company. How much big it will become? It applies to individual. Why to apply to consolidated? Logic understand, then you can never forget. If you learn, you will forget. Start. Tell me, in paid up share capital and reserve, what will apply? English read, paid up. In 11 standard, they told. What is included in paid up? Equity, preference, right, bonus, everything. Call in arrear, you have to minus. Why? Call in arrears is not paid up. It is not paid up. Call in arrear. Yes, understood. Call in advance don't include. Why? It is advance call, not paid up. Paid up includes what? What is paid up? Arrears minus. If they ask some. Reserve, all reserve included. Except accumulated depreciation and bad debt reserve. This is not reserve. This is charge against profit. Reserve means what? Appropriation of profit. Transfer of profit is reserve. This is not transfer. It is to reduce its charge against profit. But this all I don't know. Simple depreciation is there, no, that's charge against profit. You don't need to know. Basic English it is. Okay. Reserve means appropriation of profit, transfer of profit. Borrowing all include long term, short term, credit card, VOD, all from bank or financial institution. Revenue should include other income also. Total revenue, they're not saying revenue from operation, other income also included. Taxes exclude, taxes are never part of revenue. We should not take for calculation. Call in arrear means money is pending to be received. Yes. Out of 10, simple. Some. Let us take some. Out of 10, 8 rupees paid up. So you will take how much in paid up? Out of 10, 8 rupees in paid up. So 8. That by mistake I told this thing in English. Of course you will minus 2 because it's not paid up. Understood logic? Okay. Now, tell me, transfer of profit given, but bad debts also given. Will you take bad debts in reserves? No. We will not take. Simple. Bad debt is profit will be deducted. It's not reserve. Borrowing is nothing. I hope clear. I hope clear. I hope clear. With this, applicability of CARO is done. Again, if you want, we can speak one last time. Okay. I think first time some came when this K was new. After that, so they have not asked. Okay. 1, 2, 3, start. But MCQ can come. See, sometimes very shocking. Whole world will be shocked. First question only CARO. Many people don't read. No, ICAI does this. 6 question inside that on applicability. Calculate. Whole India shock. ICAI rock. ICAI likes all this. Unexpected question. 6 marks they asked on banking. Banking total weightage 4 to 6 marks. Last exam 6 marks they asked, I think, case study. Banking. Take. You did not expect, definitely we will give. So one such thing will be there. CARO. One person got his Samsung S8. Now tell me if paper comes very hard then. If you have done all chapter, your easy questions have to come. 60, 70 mark is damn easy. But why you don't find easy? Because chapter which you skipped, question came from there only. Easier ones. And chapter which you did, from their hard ones came. That is the problem. If you do all, that is why in CA who will pass? Tell me who will pass in CA? Who has brain? He will pass? Yes or no? CA exam is for brain people. Yes or no? Reply fast. Late we are getting. No. Whoever doesn't have brain, he will pass. Like me. Little also if you apply your brain, no. Let us, this to last time came, let us not do this. Over. Case file. If you don't have brain, you study everything. 100% you will pass. No brain required. Little also brain gone. Dumb people, what they will do? Read everything little. They will pass because easier question will be there. If you have brain or a weightage, let us calculate chapter wise weightage, topic wise weightage. Go on. Theory usually people skip because their practical is very strong in FM. But otherwise, we have 2 videos for FM theory. You have to do that. More than enough. Okay. Both uploaded on YouTube, chapter 1 and chapter 2. Chalo, one last time. CARO will apply to all company, including. That is why, see, every topic I am teaching. I could have easily not taught May 25 topic. I said this will come. Let's not do this. But no. No brain required. Every single word you have to do. Okay, it shall apply to all company, including foreign company. What all excluded? One person got his Samsung S8 insured from a private bank. One person company, small company, section 8 company, insurance company, private company, banking company. In private, listen more. It should not be holding or subsidiary of public. If it is holding and subsidiary of private, go ahead. PBT 1110. Paid up share capital and reserve doesn't exceed 1 crore. Borrowings doesn't exceed 1 crore. Turnover doesn't exceed 10 crore. Turnover includes other income also. Borrowing from bank or financial institution. I think we are done. But this is more than acronym. What is there? This is very easy. Like that only, with logic only you can learn this. Acronym good, but very simple. With logic only we can learn. Chalo. Now you want to start CARO or no? Shall we start CARO or no? No. Only Kajal saying yes. No. Enough. You are tired. I thought I am not tired. Don't know why. Maybe Monday, that is why. Tomorrow I will get tired. Okay, so Friday we are going to end. Tomorrow we will do chapter 10, and after that you will say, sir, Friday why? After that only 2 chapter pending. Wednesday we will do which chapter? 9. 9 only, no? I don't know, 9 maybe. And then Thursday and Friday, chapter number 5. And we are done. Not tired, but time is less. Okay, bye-bye. Good night. Take care. Enough we study. Bye. Start. CARO. Those who don't know, we are discussing CARO, Company Auditor Report Order. It includes specialized points where frauds are found usually. So, central government in consultation with NAFRA decided certain additional requirement for company applicable to which company? All company except following. One person got his Samsung S8 insured from a private bank. One person company. Samsung is a small company. One person got his Samsung small company, Section 8 company, S8 insured, insurance company, private company, banking company. In private company, it should not be holding or subsidiary of public. Okay. If it is not holding subsidiary, 3 extra point. PBT, ek 10. PBT, ek 10. Okay, so paid up share capital and reserve is not more than 1 crore. Borrowings are not at any point of time does not exceed 1 crore, and turnover including other income doesn't exceed 10 crore. I hope you remember. Start. Now in CARO 2 question can come. One, they will only mention write about this. Then you have to explain whichever points are there. Okay. Then they can write clause. I don't think they will ask clause, but they can. Clause number 10. So total CARO 2020 points are 21. So if clause 11 is asked, you have to write which is the 11th point. Okay, so that can come. Third question, they will ask a case study that this has to be reported. High chance that third will come. This has to be reported under which clause? So you have to type it should be reported in this clause, this. Start. According to me, case study only comes. Okay, start. Fixed asset. So first point they've included is fixed asset. Why? It's the biggest thing of balance sheet. After every 10 points, we will learn also. Don't worry, all 21 points will be learned in half an hour. Start. Whether company is maintaining proper records showing quantitative detail and situation of fixed asset. Why quantitative detail do we have 10? Yes. Sir, why quantitative? What quantity is there? I should know. Why situation of fixed asset? So, based on that, valuation is decided. Second, whether fixed assets are verified by management at reasonable interval. Okay, what is reasonable interval? Once in 3 years. Explanation is given in final. Whether any material discrepancies are there. Okay, what is material discrepancy? More than 10% difference in fixed asset. How it is dealt in the books of accounts. So number one, whether fixed assets are physically verified at reasonable interval by management once in 3 years. If there is material discrepancy more than 10% difference, how it is dealt in the books of accounts. Third, whether title deeds of immovable property are in the name of company. I have several fixed assets. Are they in my name or others' name? Are you clear? Very simple. 3 point. If you want, again we will speak. Whether company is maintaining quantitative records showing full particulars of quantitative records and situation of fixed asset. Second, whether fixed assets are reasonable. You just have to write whether are they physically verified at reasonable interval by management. If there is any material discrepancy, it is dealt with the books of accounts. Whether title deeds of immovable property are in the name of the company. If not, give details. Second point, how to remember. Second biggest item after fixed asset is inventory. Only is 2 points. Whether any physical verification of inventory is conducted at reasonable interval by management. In inventory, it is once a year, but this will come in final, I think. Whether any material discrepancy is there in the inventory. While physical verification, we know this difference is coming. How it is dealt with the books of accounts. What is material discrepancy? More than 10% difference. One last time. Whether physical verification of inventory is done at reasonable interval. If there is any material discrepancy in the inventory, how it is dealt with the books of accounts. Third point, loan. Loan. In loan, we have how many points? 3 points. Loan to related party. Whether loans is given to secure, loans are given secured, unsecured to LLP, other party, maintained under register under section 189. See, now section 189 is in your syllabus or no? I don't know. If it is not there, less chance. But still we have to remember whether loans is given secured or unsecured to form LLP for a register maintained under section 189. You just remember 3 points of the loan. Number one, what you will check in loan? Whether loans and advances are not prejudicial to company's interest. What is prejudicial? Harmful. When can loan and advance be harmful? Given at less rate of interest, without any terms of repayment, okay, given without security. Second point, whether the schedule of repayment of principal and interest is specified. If yes, are we receiving principal and interest regularly? Logical it is. Third and last, if amount is overdue, state the amount overdue for more than 90 days and whether steps are taken for recovery of principal and interest. So simple. Many people are saying, sir, how would you remember all this? Brain you have to apply. No need to remember. Whether loan is given to any parties, LLP, firm, under section 189, 3 points. Number one, whether loans and advances are prejudicial to company's interest. Second, if loans and advances are given, terms of repayment of interest and principal is stipulated, mentioned. Are we receiving it regularly? Third and last point, if the amount is overdue for more than 90 days, reasonable steps are taken for recovery of the amount over. What to remember in this? Next point. Loan to director, loan to related party, loan to director. In respect of loan investment guarantee, provision of section 185 and 186 are complied with. Now this can never come. Why? What they will ask for 4 marks? Little brain we should have. But still we will remember when loans is given to director, provision of section 185 and 186 are complied with. Till now how many points are done? 4. How to remember? In 1 second we can remember. Biggest item, fixed asset. Little smaller, inventory. Loan to related party, loan to director. Loan to related party, loan to director. Now, fifth point, how to remember. Where do I get money for loan? Where do I get money? From public deposits. Without deposit, how I will take money? But remember, in India, taking deposit is a crime. Because 99% of the fraud happen when you take deposit. Biggest example, person who was richest at one time, Sahara, Subroto Roy. Okay, he took deposits and vanished like he never existed. So that is why after that this clause came. These all points have a logic, but we cannot go in that much detail. Moving on. If the company has accepted deposits, okay, whether directives of RBI and provision of section 73 to 76 are complied with. See, you cannot accept deposit, but if you accept RBI, if you have taken deposit, whether directives of RBI and provision of section 73 to 76 is complied with. If not, nature of contravention. Okay, if you have not complied, what contravention you have done? Second, if a order is passed against you, order is passed by company law tribunal, national company law tribunal or RBI, whether you have complied with the same. Over. Simple. If you have taken deposit, whether directives of RBI and provision of section 73 to 76 is complied with. If not, nature of contravention. Okay, next, if order is passed, see you have done some mischief. If order is passed by company law tribunal, national company law tribunal, RBI, whether you have complied with the order or not. Over. Next, cost record. You know there are certain items whose cost cannot increase, like there is a salt, okay, there is petrol, all that cost cannot increase. So for them, government has told what? Okay, you maintain cost records because you can earn only 5% profit above this. So many people will say our cost is more. Show us a record. So for critical sector, cost record is maintained. Sir, can you guide what are critical sector? Yes, I could have guide had you come before 3 years. It was in syllabus. Now deleted. But still I know techniques, so I will guide. Set dip, sugar, electricity, telecommunication. drugs, industrial, alcohol, petroleum and gas. These are critical sector. So government is telling cost record. If it applies to you, whether you have maintained the same over, whether maintenance of cost record is given under section 148, whether such records are maintained, just check. What time pass? This point can come. Why? See, you have to find such point which has no relation with Companies Act. This can come. Statutory dues. Very simple. Whether company is regular in depositing statutory due. Your next question. What is statutory due? PF, ESIC, TDS, okay, income tax, etc. Whether company is regular in depositing statutory dues. If the amount is overdue, okay, then see, is it overdue for more than 6 months on the last day of the year? If it is overdue for more than 6 months, then you have to disclose. Let's take example. One ESIC, VAT you have not paid on 1st January. So on 31st March, it will be only 3 months. So no need to disclose. Such problems can happen in any business. But if it is pending since what? 1st September, then it's more than 6 months. In 1 minute over, I will show you diagram. Start. See here. Undisputed dues. Are you regular in depositing? Then ignore. No, sir, I am not regular. I forgot. Outstanding. Is it outstanding for more than 6 months on balance sheet? Show. Less than 6 months, ignore. One last time. Are you regular? Ignore. Outstanding on last day of balance sheet for less than 6 months, ignore. Outstanding for more than 6 months, you have to show. Moving on. Second, where dues of income tax, sales tax, okay, is not deposited due to any dispute. Above was undisputed. If the dues are not deposited due to any dispute, amount involved and forum where dispute is pending, we have to mention. Amount means what is the amount and where the case is going on. High Court, Supreme Court, okay, where. Forum where dispute is pending. A mere representation to department is not dispute. See, you just submit to VAT authority. I have a dispute. That is not dispute. Once they accept your request, only then it is a dispute. Okay, very, very simple. 1, 2, 3, start. Whether company is, divide dues into two parts: disputed, undisputed. Whether company is regular in depositing undisputed statutory dues. Okay, if any amount is outstanding for a period of more than 6 months on balance sheet date, we have to disclose. Second, because a person who will not pay off government, no, he will not pay anyone. Remember, he is worst person. So we are catching the fraud. Second, okay, if the amount is not deposited due to any dispute, amount involved and forum where dispute is pending, fully 5 marks you will get. Moving on. Unrecorded income. Many times government, if you want stock market to increase by 20% today, government just has to make one announcement. You can show your black money as white money. We will never ask you question. You can show your black money as white money. We will never ask you question. Directly, all people will deposit money in stock market because crores of black money is there in India. Why is it not coming in the system? Okay, because they are afraid they have to pay tax. Okay, they will get caught. The day this much money will come, entire market will blast. But that will never ever come. That is why they say always have white income. Because if you have black income, what will happen? Money will never be passed to second generation. Maximum you can give your child, but he will also become like you only, useless fellow. It will never go to his child. 101% fraud will happen. But we don't have time. Okay, come here. Whether any transactions which are not recorded as income are shown as income as per Income Tax Act. Okay, Income Tax Act allows sometimes. Then whether it is recorded in books of accounts, you have to see. Whether any transactions not recorded in books have been shown as income under Income Tax Act, whether now it is shown in books of accounts. Over. This is also another point which can come. Definitely. Repayment of dues. Always remember, the buck starts here. The day you don't pay your EMIs, no, is the starting point you are going to do some big mischief in life. So this is a favorite point. Okay, start. Whether company has defaulted in repayment of loan or other borrowings or interest. Company has defaulted in loan borrowing or interest, then we have to give following details: nature of the borrowing, name of the lender, amount not paid on due date, principal not paid or interest. Lender wise detail has to be given in case of default to bank, financial institution or government. Simple. If a company has done default in paying loan, borrowing or interest, then what we need to write? No need to remember nature of the borrowing. Second, number of days the delay is there. Okay. Lender wise, then what is that? Interest is not paid or principal. What are the remarks? Lender wise detail has to be given. Second, whether company is declared a willful defaulter by bank or financial institution. If you are a willful defaulter means you have money but you still don't want to pay. Are you declared a willful defaulter by bank or financial institution? Third, whether term loan, case study can come, whether term loan are applied for the same purpose for which it is used. If not, amount and the non-compliance. Two things: amount and purpose for which it is used. Let's take an example. You took loan for working capital, but you used for other purpose. Loan are applied for same purpose. If not, amount of loan and purpose for which it is used. Simple. Next, whether funds raised on short term are used for long term. Okay. If yes, amount and purpose for which it is used. Same thing again and again. Nature and amount. Next, whether company has taken any funds to meet the obligation. You took funds to meet obligation of subsidiary, associate, joint venture. Give details of the nature of such transaction and amount. Last, whether company has raised the funds by pledging the security of subsidiary, associate, joint venture. Give details and also report if there is default in such loan. Now you will think, oh, so many points and I will not remember. Just remember each point. Case study will be asked for 5 marks. You directly have to type it is clause number 9. Over. 4 marks you will get. So let's understand all points. Number 1. Whether company has defaulted in repayment of loan or interest or borrowing. Then we need to give following details. Person from whom the loan was taken. Okay. Default is done of what? Principal or interest. Number of days. Okay. Lender wise detail has to be given. Second, whether company is declared a willful defaulter by bank or financial institution. Third point, whether term loan are applied for the same purpose for which it is used. If not, give detail of amount and purpose for which it is used. Whether short term funds are used for long term purpose. If yes, amount and the purpose for which it is used. If you have taken the loan for meeting the obligation of subsidiary, associate, joint venture, give detail of nature of the transaction and amount in each case. If you have taken the loan by pledging, what is pledging? Girvi. Pledging securities of subsidiary, associate, joint venture, give details of amount and the nature of the transaction and whether there is default in such loan. Over. 10. Whether money is raised by public issue, IPO, FPO. What is number 1? If any amount is raised by IPO, okay, then see whether it is used for the same purpose. If not, specify the amount and the purpose for which it is used and whether subsequent rectification is done or not. IPO, you said factory, but you are enjoying in Singapore. Okay, so together with delay and subsequent rectification. Put is preferential allotment. Sometimes we don't do IPO because it's a time consuming process. So I know few people, I will call Gautam, Arti, Jatin, Kinjal, Akansha and Shikha. They are very rich. All are chartered accountant, all have 100 crore. I tell them, can you give me 5 crore, all of you? Definitely your share price will increase to 10 crore in 3 years. They are like, let us try. They will look at me. Okay. Maybe if they want, they will give me. That's private placement. Selected raising of money with few people. So if you have done that, whether funds are used for same, they have given for factory, whether funds are used for same purpose. If not, amount involved and purpose for which it is used and rectification done. Over. Whether it is used for same, whether I have done private placement of share or debenture, requirements of 42 and 62 are complied with and funds are used for the same purpose. If not, amount involved and nature of non-compliance. With this, half CARO is done. Shall we read now? Yes, sir. Definitely all 10 clause in 2 minutes you will remember. Many people, shall I skip? Don't even think of skipping. If you write bad, you know how much you get out of 5, 3. It's okay. I don't need 5 on 5 every time. Start. How to remember in 1 second over. 1, 2, 3, start. Biggest item of balance sheet, fixed asset. Little smaller item, inventory. Fixed asset, inventory. Now what I will give? Loan to related party, loan to director. Loan to related party, loan to director. Fixed asset, inventory. Loan to related party, loan to director. Where you got money from? Public deposit. To give loan, you got money from public deposit. Now one technique you have to remember. CSURU. CS, you are my favorite. URU. Cost record statutory due. Cost record statutory due. U. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Unrecorded income. Repayment of loan. Usage of IPO, FPO. So simple. One last time. CSURU. 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 Cost record statutory due. Cost record statutory due. Cost record statutory due. Usage of IPO, sorry, unrecorded income. Repayment of loan. Usage of IPO, FPO. Unrecorded income. Repayment of, one last time. CSURU. Cost record statutory due. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Break of 15 seconds. 10 seconds on. Now all points are simple. Done. Moving on. Fraud, simple. Whether any fraud is done by the company or on the company, whether you have done the fraud or someone has done on you, it has to be reported, nature and amount. Any fraud done by the company or on the company. Yesterday we learned any fraud done under section 143.12. Central government, whether auditor has reported to central government in form ADT4. Okay, how to remember form? It will not come, but still 4 for fraud. 4 for fraud. So ADT4. Okay, whether auditor has received any whistleblower complaint during the year. What is whistleblower? Sometimes your own employee or someone who knows you tells there is something wrong in the company. How did Satyam fraud got caught? By whistleblower. Someone from the company only told they are doing wrong. Over. Fraud, whether any fraud done by the company or on the company is reported, amount and nature of the fraud has to be indicated. Whether any fraud under section 143.12, if it is exceeding 1 crore, is reported to central government. Whether any whistleblower complaint is received during the year. Nidhi company came in last to last. 3 attempts have passed. Once they have not asked, okay. Once they asked Nidhi company, God knows other what they asked. But moving on. Nidhi company. 2 points are important here. Nidhi company is what? Their main purpose is unofficial bank. Members should benefit. It's not for others, it's for members. Whether Nidhi company is maintaining net owned funds. See, Nidhi company I forgot to tell. In this member come together, deposit money. So they can borrow at later date. All people come together, deposit money. Anyone wants loan, we will give him. Anyone wants, we will give him. Okay. So whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. What does this mean? See, you can invite deposits from other, but you should have at least one your own money. So for against every 20,000, 1,000 should be mine. 21,000 not allowed. If I want 21,000, my money should be more. So whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. For every 20 rupees, one should be mine. Okay, net owned fund to deposits are from outside, 1:20. Whether Nidhi company is maintaining 10% of unencumbered, means without any condition, term deposit to meet liability. Whatever deposits I get, 10% I have to do FD. Tomorrow any member comes, then I cannot say that I give everything loan. 10% set aside in FD. Whether then you accept lot of money from people, whether you have done any default in repayment of interest, deposits or repayment of the loan, give details also. Very, very simple. You might find this is hard, super simple here. Whether Nidhi company is 3 points. Whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. Second, whether Nidhi company is setting aside out of total deposit 10% of the total deposits without any condition. Third and last, whether it is doing any default in repayment of interest on deposits or repayment of deposits specified. Okay, we need to give details over. Related party, whether all transactions of related party are in compliance with section 177, 188. Both are related. See 7788. And details have been disclosed in financial statement as per AS 18. Whatever written in AS 18, you have followed. Simple. Whether company has a good internal audit system matching with size and nature of business. I am as big as Gautam Adani. Is my internal audit team big enough? I will report. Okay. Whether company has adequate internal audit system commensurate with the size and nature of business. Whether reports of internal auditor are taken into consideration by stat auditor. Okay. Do you consider the reports? You need to mention. So simple. Non-cash transaction. ESOP is a non-cash transaction. I sell assets to director for free is a non-cash transaction. Whether any non-cash transaction is entered with director or person, provision of section 192 is complied. Less chance of coming. Why? Nothing is given. Understood? So non-cash transaction is giving ESOP. Okay. If I have done any non-cash transaction, provision of section 192 is complied. Registration with RBI. See whether company is required to be registered as a NBFC, non-banking finance company under section 45IA of RBI Act. Whether registration is obtained. Very simple. Whether company has to be registered under section 45IA, that is as a NBFC, if the registration has been obtained. Second, whether company has done any finance or housing finance activity without valid certificate of RBI. Next, whether company is a core investment company. You know what is core investment? In many big companies, Tata, Reliance, there is special investment company. It does no business except investing the money of all other companies. So whether you have a core investment company as defined by the regulations of RBI, whether you continue to fulfill the criteria of core investment company. If you are an exempted or unregistered core investment company, you continue to fulfill criteria. Sir, what is the criteria? More than 100 crore assets required, but we are not concerned. Okay. If whether there is more than one core investment company, specify number of core investment company. Simple. Let us learn whether company is required to be registered under section 45IA of the RBI Act, whether registration is obtained. Whether company has done any finance or housing finance activity without the certificate of RBI. Whether company is a core investment company, okay, whether it continues to fulfill the criteria. If it is an exempted core investment company, it continues to fulfill. Whether the group has more than one core investment company, we need to mention that. Cash loss. See, loss is allowed, but cash loss is a crime. How to find out cash loss? Total profit, add non-cash expense like depreciation. Whether company has incurred cash losses in the immediately preceding financial year, last year. If so, mention amount of cash losses. Simple. Whether there is resignation of statutory auditor. If so, auditor has taken into consideration the issues or objections raised by stat auditor. No auditor will ever leave the company. Why? He is getting money. If he has left, whether you have taken into consideration his issues. This will only apply if auditor has changed. Okay. Next point. Whether there is any material uncertainty by looking at the company's balance sheet ratio, whether there is material uncertainty relating to going concern. We have discussed this full point, SA 570. Last two. Transfer of unspent CSR amount. Corporate social responsibility is 2%. Okay, if you don't know. In this, there are two things. Spend the same year, but sometimes what happens? We are doing a project. For example, building a school, building a hospital. In that 3 years time is given. If it's an ongoing project, I need to spend in 3 years. If I don't spend the amount, am I depositing it to government account? Then government will spend. Okay, so read. Whether in respect of other than ongoing project, means which I need to spend every year, company has transferred the unspent amount to schedule 7 within a period of 6 months from the end of the year. Schedule 7 is PM CARE fund. If I don't spend the amount, I need to give to Prime Minister, PM CARE Fund. Whether in respect of other than ongoing project, company has transferred unspent amount to Schedule 7 of the Companies Act within a period of 6 months from the end of the year. Last, whether any amount is remaining unspent regarding any project, okay, I have to spend in 3 years because a project is going on, has been transferred to special account as per section 135(6). Okay, so other than ongoing project, other than ongoing, I need to spend same year, if not within 6 months, transfer to special account. Ongoing project, I need to spend in 3 years, if not transfer. Last, whether there is qualification or adverse remark in CARO report of companies included in consolidated financial statement. Indicate detail of company and paragraph number. Simple. I have 8 companies. Any other company of my group, that's consolidation, has got any bad remark in any CARO point, I need to write here that my subsidiary company 4th point was not followed. In my holding company 9th point was not followed. In my associate company 12th point was not followed. Over. We have to learn now. 1, 2, 3, start. First 10 are already done, but let us do it again. Fixed asset, inventory, loan to related party, loan to director, loan to related party, loan. Where you get money for loan? Public deposit, public deposit, public deposits. Okay. CSURU, cost record, statutory due, unrecorded income, repayment of loan, usage of IPO, FPO. Now, very simple. Fraud. 2 people are biggest fraud in this country. Nidhi company related party, Nidhi company related party, fraud, Nidhi company related party, Nidhi company related party, Nidhi company. How to escape from them? How to save? By internal audit. Very simple, 4 logical point. Fraud. 2 people are biggest fraud in this company. Nidhi company related party, in this country. Fraud. Nidhi company related party, Nidhi company. How to save? Internal audit. Break. Learn till here. Fraud, Nidhi company related party, Nidhi company, how to save? Internal audit. Now very simple, NCCMCC, we are done. NCMC, NCCMCC, double N double C double M double C. N, non-cash transaction by director, NBFC, non-cash transaction by director, NBFC, double C. Cash losses consideration of issue by outgoing auditor, cash losses consideration of issue by outgoing auditor, material uncertainty relating to going concern. M is one only, material uncertainty relating to going concern. Last, CSR, CARO report of group company, CSR, CARO report of group company. NCCMCC, NCCMCC, N. NBFC non-cash transaction by director, NBFC non-cash transaction by director, double C, cash losses consideration of issue by outgoing auditor, material uncertainty. Last, double C, CSR, CARO report of group company, CSR, CARO report of group company. Done. NCCMCC, non-cash transaction by director, NBFC, non-cash, sorry. Non-cash transaction by director, NBFC, perfect. Double C, cash losses, consideration of issue by outgoing audit, material uncertainty, CSR, CARO report of group company. Done. Last time, non-cash transaction by director, NBFC, cash losses, consideration of issue by outgoing audit, material uncertainty, CSR, CARO report of group company. Last 2 chapters are pending. See you tomorrow. Bye bye. Good night.